Good morning. Can Madam Hearing Examiner and Mr. Hearing Examiner Ryan?
Morning.
I didn't know whether to put it in an email, but since we're in this procedural moment, I would like to request to have my video off more often today. I'm juggling several matters and would hope to be excused to a greater degree as some of the other attorneys have been throughout the hearing, if that's possible.
I think that's probably possible, Mr. Getco. When we go on the record this morning, first thing I will ask about your Exhibit 1. And once we get that taken care of, then you may be excused as necessary.
Thank you very much.
Okay.
Thank you.
Anybody else have anything procedural? Ms. Gerson?
Yes, hearing examiner. I have a conflict this afternoon. CC will be represented by Ms. Lynch throughout today's hearing, but I, with your leave, would not plan to return after the lunch break.
All right. We will see whether or not we'll be back after the lunch break. Depending on how many questions. I believe we've got 4 witnesses left. And we'll see how that proceeds. But obviously, if you need to be excused, that's fine.
Thank you.
Anybody else have anything procedural that we need to deal with before we go on the record?
Madam Hearing Examiner, I just spoke to Mr. Gorman. He's waiting to be admitted to the Zoom call.
I see him, and he should be admitted to the Zoom call at this point. Okay. How are we doing this morning, Mr. Lee?
Good. I'm ready.
I think I got something from you like at 4:30 this morning.
That was day 2's transcript.
Do you sleep?
Not much.
Well, hopefully, after we conclude today, you can get some rest, sir. We appreciate your efforts. Okay, I think we can go ahead and go back on the record from our evening recess. We are continuing our hearing in case number 21-00267. This is in the matter of New Mexico Gas Company's rate increase request. And Mr. Getco, my understanding, the last witness we had was Attorney General witness Ms. Crane, whose testimony was provisionally admitted subject to the corrected version being filed in the Dropbox. Did that occur, sir?
Yes, I uploaded that to the Dropbox with the 2 corrections that we had discussed, and I followed up with an email to the hearing examiners. So it should be there. It is labeled as corrected, and I also left the original one in there because I did not know whether you all would want to reference that to compare the corrected to that original version or not. I didn't think it was correct to just delete.
Okay, I see it. Thank you, sir. Having the corrected exhibit as verified by Ms. Crane yesterday, subject to the non-objection agreement, And in compliance with the Dropbox agreement, I will remove the provisional ruling and admit AG Exhibit 1 as corrected. Anything further from the Attorney General's office, Mr. Getko?
Oh, Your Honor, thank you very much.
Thank you very much, Mr. Getko. And now we will go to our next intervener witness. And Mr. Gould, I believe you have a witness.
Yes, ma'am. Mr. Michael Gordon, Gordon. You can see I'm starting off really well. Mr. Michael Gorman is in the Zoom call and ready to be sworn in.
Very well. Good morning, Mr. Gorman.
Good morning.
Good to see you.
Nice to see you.
Mr. Lee, would you please swear the witness?
Or would you please raise your right hand? You solemnly swear the testimony you're about to give in the matter not pending should be the truth, the whole truth, and nothing but the truth, so help you God?
I do.
Thank you.
Mr. Gorman, would you state your full name and business address for the record, please?
My name is Michael Gorman. My business address is 16690 Swingley Ridge Road, Chesterfield, Missouri.
Who are you employed by?
Brubaker and Associates, BAI Inc.
What are your job responsibilities at the Brubaker firm?
I am a managing principal. We are economic and regulatory consultants for utility services and energy procurement.
Could you, your educational background and your job experience that qualifies you as an expert in utility rate matters?
I've been in utility regulatory matters since almost 40 years now. I started off working for the Illinois Commerce Commission, which regulates utility companies in Illinois. Started off in the engineering division, planning division, worked my way up into the financial analysis section, worked on rate cases for the Illinois Commerce Commission from most of the 1980s. In early 1990, I joined the firm of Drazen, Brubaker and Associates, which was the predecessor of the current firm, Brubaker and Associates, BAI Inc. While with BAI, I have testified on regulatory matters for a little more than 30 years, largely on utility revenue requirements, financial issues, including cost of capital, cost of service studies, integrated resource planning studies, and various policy issues, including special financing purpose mechanisms such as securitization bonds. We also engage in competitive procurement in certain jurisdictions where you can buy gas and/or electricity from third-party unregulated suppliers. In those jurisdictions, we look at the financial and technical qualifications of third-party suppliers, conduct competitive solicitations with those qualified suppliers to negotiate commodity procurement contracts on behalf of our customers. And frequently, we act on behalf of our customers to oversee the commercial terms of those contracts when they are in effect.
What academic degrees do you hold?
Mr. Gould, I've allowed you some latitude.
Okay.
We have not afforded any of the other witness.
Okay, we'll move forward.
Opportunity to give synopsis of the information, and in the interest of efficiency, if you could go ahead with offering your exhibit.
Thank you, ma'am. Mr. Gorman, you have before you a document that has been marked as Inter Exhibit number 1. Could you describe that document?
That is my testimony in support of the unopposed stipulation in this case.
Was that testimony prepared by you or under your direct supervision?
It was, yes.
Do you have any changes to make to that document?
I do not.
If I asked you the same questions today, would your answers be the same?
They would.
And are those answers true and correct to the best of your knowledge?
Yes.
And Mr. Gorman, you also have before you a document that has been marked as Inter Exhibit number 2. Could you describe that document?
This is testimony outlining responses to bench requests for specific information concerning the unopposed stipulation.
Was that testimony prepared by you or under your direct supervision?
It was, yes.
Do you have any changes to make to this document?
I do not.
If you were asked the same questions today, would your answers be the same?
Yes,
Are those answers true and correct to the best of your knowledge?
they are. Yes,
And hearing examiners, I would verify that true and correct copies of both New Mexico Area Exhibit Number 1 and New Mexico Area Exhibit Number 2, which Mr. Gorman has just attested to you to, have been uploaded into the Dropbox as required by the hearing examiner's orders in this case.
Very well, Mr. Gould.
And with that, I would ask for admission of NM Area Exhibit Number 1 and NM Area Exhibit Number 2.
With regard to New Mexico Area Exhibit 1, Mr. Gorman's pre-filed testimony in support of the stipulation as verified by him here today, subject to the no objection agreement and pursuant to New Mexico Area Council verification that the correct copy of New Mexico Area Exhibit 1 has been placed in the Dropbox. New Mexico Area Exhibit 1 is admitted. New Mexico Area Exhibit 2, Mr. Gorman's response to the June 6th bench requests as verified by him here today, subject to the no objection agreement and pursuant to counsel for New Mexico Area assurance that the correct copy of New Mexico Area Exhibit 2 has been placed in the Dropbox. New Mexico Area Exhibit 2 will be admitted. Mr. Gould.
Thank you, Madam Hearing Examiner. And with that, I tender Mr. Gorman for examination by you and Mr. Ryan.
Thank you. Mr. Gorman, I just have a few questions for you. And I know your testimony in support of the stipulation and your responsibility in this case has to do with the revenue requirement, class cost of service, and the rates that are contained in the stipulation. Correct, sir?
that is correct. Yes.
And you're referencing on page 3 of New Mexico Area Exhibit 1 at the bottom of the page. Lines 22, beginning on line 22, you say also outlined in stipulation exhibit number 1, pages 4 and 5, the stipulation reflected approximately a $71 million reduction in the test year net original cost rate base as outlined in exhibit number 1, page 10. Line 22, column C. That's your testimony?
Yes.
Do you consider that significant?
Well, I think it more accurately reflects cost of service within the forecasted test year and a more realistic estimate of when the planned capital investments will actually be placed in service to provide service to customers. and provides a better matching of in-service investments with the estimated revenue at current rates within the forecasted test year. So I think that is one of the aspects of the settlement that produces a more reasonable estimate of the cost of service in this case.
And you note on page 4, continuing with that line of thought on line 2, the reduction in the rate base was largely realized through a reduced projected in-service amount of plant additions. Correct?
I do say that, yes.
And so then what we see from this is that gas company had projected that they were going to have a significant, potentially a $71 million IMP projects that have been now deferred. Is that a correct characterization?
Well, they haven't been deferred. I would characterize it more as they're a more accurate estimate of when those IMP projects would actually be placed into service, is how I interpret that, and it's how we were investigating the company's cost of service filing. Many of these IMP projects are projected capital improvements, and the timing of when those capital improvements will be placed in service is not known. It's estimated. So our adjustment to the cost of service in this forecasted test year reflects what I found to be a more reasonable estimate of the amount of IMP projects that will actually be placed in service within the forecasted test year. Many of these projects will still be placed in service, but it'll be beyond the end of the test year.
Well, I don't know. I sort of feel like you're saying tomato and I'm saying tomato. You know, have you been listening to the testimony earlier this week?
I have, not all of it, but most of it, yes.
Because the impression that I was getting from the gas company testimony is that, especially with regard to some of the pipeline replacement type projects, especially the extrude and some of the, I don't know if it was plastic piping, I don't recall specifically, but I do recall, you know, hearing from gas company witnesses that they were basically able to defer replacement of particular projects, still maintain safety and reliability and you know, in furtherance of meeting code requirements, and that they had been trying to get ahead of the curve with that replacement. Did you hear that testimony?
I'd have to go back and review the transcript, but generally, I think we are saying the same thing, but from a different perspective. Because when we reviewed the filing, we were looking at whether or not the projected plant additions being placed in service were reasonable anticipations of actually accomplishing the planned capital spend. And our investigation raised issues as whether or not they were being overly optimistic about being able to accomplish the in-service application of a lot of these capital expenditures within the forward test year timeframe. So I don't necessarily agree with their characterization that they're being deferred, but rather that the projects are being placed in service in more of a realistic timeframe. Consequently, the settlement, we believe, produces a better estimate of what the cost of service is in the forecasted test year.
So then when you were working the case up before the settlement actually occurred, was it your belief that that the projected plant in service expense was not accurate?
We were looking at the timing of expected placing in service certain plant additions. We did find that there were uncertainties about whether or not the company could accomplish the significant capital investments that they're planning to make and have them in service within the test year. So that was an issue we were investigating in Discovery, yes.
So do you believe then that the removal of the $71 million results in a more accurate rate base than what was originally filed with the application?
Yes. Within the test year, yes.
Within the test year, or do you believe it could be further reduced?
We weren't questioning whether or not the improvements were prudent and reasonable. It was simply a matter of timing of expected in-service dates of those within the forecasted test year.
Okay, do you think that there's any other potential investments then that won't be met timely within the test year?
We think the forecasted, the settlement rate base reflects a reasonable expectation that the company can accomplish in making the capital investments and placing the plant in service within the timeframes of the test year in this case.
So further on down that page, on page 4, you're answering a question posed at line 11. Does the unopposed stipulation contain a fair and reasonable allocation?
I'm sorry, Judge, I missed a word.
Okay, does the unopposed stipulation
Yes, thank you.
contain a fair and reasonable allocation of the revenue increase across the tariff rate classes?
I do.
And you do. You begin your testimony on line 14 saying, yes, developed on stipulation exhibit 2, the proposed spread of the revenue deficiency reflects a movement toward a compromise on class cost of service and produces an adjustment to each rate class's revenue collection that aligns with the cost of service. The resulting increase by rate class is fair and reasonable. That's your testimony?
It is, yes.
And what is the basis for your conclusion that that this resulting compromise and adjustment results in a rate design that's fair and reasonable?
Well, it started with the company's fully allocated cost of service study, and I reviewed the way they are allocating transmission and distribution, plant equipment and cost across the various rate classes. And we generally believe that the company's fully allocated cost of service study, or FACOS, was reasonable, but we were planning to take certain issues with certain aspects of that cost of service study. And those adjustments likely would have expanded the classification of certain elements of transmission costs and reallocated those costs across rate classes based on that revised classification. We were also looking at the methodology for allocating distribution main costs across rate classes and the appropriateness of the demand allocator with respect to that functional category of cost. And the result of our analysis would have suggested that the company may have been allocating cost, under allocating cost to certain classes and over allocating cost to other classes. But the settlement compromised on that allocation by allocating the settlement revenue permanent cost classes in a way that we think does reasonably align with what we believe to be an accurate cost of service study. While we didn't agree with the company on a class cost of service study, we were very close to them, but with our methods of adjusting that cost of service, we think the settlement would assign revenue responsibility to each rate class in line with what we believe to be a reasonable estimate of cost of service, and also reasonably aligns with the cost of service under the company's FACOS study, and reflects a gradual movement towards cost of service.
Were you primarily concerned with rate 70?
That is the class that my clients represent, but we were primarily concerned with ensuring that the costs are allocated across rate classes in line with cost causation.
Well, the original proposal by gas company was a 25.7 increase for rate 70, wasn't it?
I believe that's right, yes.
And ultimately, the stipulated percentage increase was 10.89, correct?
That's correct.
Do you think that's still too high?
I'm sorry, that's still what?
Do you think that's still too high?
Well, it's higher than my clients would like it to be, but given the company's need for capital investments to maintain system reliability and to modernize your system, it's an increase that we're willing to accept.
Further on down on page 4, that line 19, you say, as shown on stipulation exhibit 2, no class receives less than 52% of the system average increase of 9.68 or a 5% increase, and no class receives more than 1.35 times the system average increase or a 13.01 increase. That's your testimony?
Yes.
Why are those comparisons important? Why did you cite those?
Because they show a relative distribution of the increase in revenue requirement across rate classes that reflects a movement, a gradual movement towards cost of service, while also considering the potential rate consequences on certain customers that need a larger increase than other classes of customers.
Based upon your understanding of the fully allocated cost of service, are there rate classes that are not paying their full cost of service?
Yes.
Which one are they?
They would have been listed in Mr. Yarnell's testimony.
Mr. Yardley?
Yardley, yes, thank you. Based on his fully allocated cost of service study, which we largely agreed with, but did not completely agree with.
Are the customers that utilize rate 70 paying their fully allocated cost of service?
No, they would have required an increase to move towards cost of service. They're outlined in table 1 of Mr. Yardley's testimony at his page 30.
Yes, I have that and I'm just trying to get it up on the screen. There we go. So for example, if we look at rate 70 and under table 1, rate of return by class, in the second, well, in the fully allocated cost of service rate of return that says 5.61, and then under unitized it says 2.41. So how do those numbers indicate whether or not rate 70 is actually paying its cost of service?
Those are rate of returns by rate classes based on the company's fully allocated cost of service study. In this, these are current rates. At current rates, the overall system is producing a rate of return at 2.24%. For classes that are producing a rate of return at 2.24%, they're pretty close to cost of service. For classes that have a rate of return less than 2.24%, the company's fully allocated cost of service study would suggest that they need a rate increase in order to bring their rate of return up to the target rate of return.
And does the parenthesis around those numbers indicate that those are negative?
Yes.
So it's a negative 5.61.
Under the company's fully allocated cost of service study, that's correct.
Yes, sir. Which you don't necessarily agree with.
Not completely, no. We think there are certain classification issues with the company's fully allocated cost of service study, which shifted cost to some of the higher volume classes, such as rate 61 and rate 70, and away from some of the lower load factor classes, such as rates 10, 30, and 31.
And do you think if they had made those shifts that rate 70 would be paying the 2.24?
They'd be very close to it, yes.
Because they seem pretty far away right now, right?
Yeah, but there's significant, they are, yes, but there are problems with the classification of transmission main costs, which we think were not proper and had the effect of shifting too much transmission related costs to higher load factor classes.
Okay. Is there any other comparison? I keep hearing the comparison of, I don't know if you heard me ask this yesterday. I believe I asked Ms. Crane. It seems like particularly the company likes to put out the number of, oh, well, the stipulation for the agreed upon for the typical residential customer using 53 therms, the increase is only going to be 4.3% or $2.67. Have you heard that comparison?
I have, yes.
Do you think that comparison is important, and if so, why?
Generally, it is important to regulatory commissions because they want to know what the impact is on the smaller users. And generalizing the typical bill for a smaller user is a way of describing that impact. And that's my understanding of that's what the company tried to offer the commission, is that sort of information so they could gauge the impact on the smaller users on the system.
Then further your testimony on page 5, when you're talking about the class cost of service, at line 6, you say many of the parties took issue with the company's class cost of service study and the manner in which it classified distribution and plant investment between customer and demand. This testimony refers to your explanation that you've just given me.
Yes.
And for the record, sir, will you define and or distinguish plant investment as it relates to demand and what the issue is here?
The issue deals with the customer characteristics that cause a utility to justify making investment in transmission main costs and distribution main cost. Those main costs are incurred for the purpose of providing service to customers. So a utility designs its transmission and distribution main system in order to collect gas from the point of receipt from the upstream pipeline or midstream collection company, and then transport that gas in a transmission system to the point of a distribution network, at which point then it's distributed from that point to end-use customers. Those costs are incurred in order to meet the design date demands of the system on the customers on the system, but those infrastructure are also designed in order to have adequate length of pipe in order to connect all customers to the system. So part of the design criteria is related to design day demand needed to have adequate capacity to provide firm service to all customers on the system. But another design aspect is the actual length of pipe needed in order to deliver gas from the point of receipt to the point of transfer, either from transmission to distribution or from distribution to customer meter of that gas that has been delivered to the utility, and then the utility in turn is delivering it to end-use customers. So that process of recognizing the customer characteristics that cause the utility to incur costs to provide that delivery service, it's necessary to characterize the transmission and the distribution infrastructure into both customer components and demand components in order to properly allocate those costs across the various customers that reflect that customer characteristic that cause the utility to incur those costs.
And your testimony is that some of the characteristics, for example, of a residential customer class using perhaps more distribution resources wouldn't necessarily be allocated appropriately to a transmission customer who might take service differently?
No, it's really a functionalization of both transmission in step one, the customer and demand characteristics of the distribution system. And then step two would be the classification of distribution equipment for delivering gas from the distribution system to customers on the distribution system based on how the company invested in that distribution system to provide that service. There are clear distinctions. Some of the larger customers aren't connected to the distribution system and therefore not allocated part of that distribution system, but they are connected to the transmission system and therefore they pay for part of the cost of use of that transmission network. So it's not necessarily allocating costs back and forth between transmission and distribution, but rather it's a proper assessment of the classification of the transmission system and the allocation of that across all rate classes. And second, the classification of distribution equipment, and then the allocation of all of those costs across customers that use that receive service from the distribution system.
Sir, further on page 5 of your testimony, at line 11, you say, because the parties could not reach a consensus on a class cost of service study, they negotiated a reasonable and balanced spread of the increase across rate classes that reasonably aligned with the range of cost of service findings, reflecting each party's assessment of gas companies' class cost of service. That's your testimony, sir?
It is, yes.
What does the phrase reasonably aligned mean to you?
It means that we're allocating the increase in this case across the rate classes that reflect a movement towards cost of service study, reflecting, the cost of service study that I thought was appropriate. Also reasonably aligns with the movement towards cost of service, a gradual movement towards cost of service using the company's cost of service study. And I believe other parties were looking at it from a similar perspective. And I can't speak for them, but I believe they've reached a similar conclusion.
Does reasonably aligned have a percentage or numerical figure in your mind?
It would depend on the party's perspective, but in my interpretation of it, it shows that that revenue spread across the rate classes. Nobody gets more than a 13% increase or less than a 5% increase. Reflects movement towards cost of service in a gradual manner, but also ensures that no single rate class gets an exorbitantly high increase in this settlement.
Well, if we look at the stipulated proposed rates for each rate class, some rates have no proposed increase, do they? Cogeneration rate 35.
Yeah, that is true. But there's no load on that rate, so it really didn't impact the distribution of the revenue spread.
Okay, so that was my next question. What the explanation was, and it's because there's nobody uses that.
That's why I didn't pay any attention to it, because there's no load on the rate. So
okay. And then under the proposed stipulation rates, the highest increase was attributed to rate 37, the gas air conditioning, 12.97.
yes.
Do you know why that was?
It's largely because they have the load they have on peak hour, peak day demands, largely attributable to the distribution increase in the rate. like the rate design also had a larger increase in the access charge as well.
I've never heard of gas air conditioning before. Is that a prevalent service?
Depends on the system you're reviewing, but you know, if the air conditioner actually first heats up the air before it cools it off. So I think gas air conditioners, as I understand it, are actually more efficient than electric air conditioning units.
I just wondered in looking at the numbers and whether or not that was a service that's utilized very frequently here, if you know.
I have not done extensive review of that, but I am familiar with the use of gas as a component of air conditioning equipment.
Did you testify in the last gas company rate case 19-00317, Mr. Gorman?
I was in the last rate case. I don't recall if I testified or not.
Were you in the rate case before that, the 18-00038, I believe?
I don't believe I was in that case.
I've expressed some concern about the 3 rate cases in 4 years, knowing that they're going to potentially file again at the end of 2023. From your perspective, should the frequency of rate cases do you have any concern with
Well,
regard
I
to
think
your client's interest on these frequent rate cases?
You know, the frequency of the rate cases is aligned with the company's capital investment program. How frequent they need to adjust rates is aligning with their growth and rate-based investments. The benefit to customers of frequent rate cases as opposed to a rider mechanism is that the adjustment to rates truly reflect the most accurate compromise on cost of service, as opposed to rider mechanisms that expose customers to significant risk of allowing for rate increases when complete cost of service filings wouldn't justify a rate increase. So at this point, the company is in the middle or within a very large capital program, which is growing the rate base, which is creating a need for rate case filings on a fairly regular basis. As their embedded plant grows, the need for rate cases likely will slow over time, because even if their system modernization continues, the amount of depreciation expense and internally generated funds will have the effect of slowing rate-based growth. And that should delay the timing of rate cases later on. But importantly, with frequent rate cases and the ability to ensure that any increase in rates truly reflects cost of service within a test year framework, provides customers protections that they might not have if the utility was allowed to adjust rates outside of a rate case based on rider mechanisms.
So I guess what I'm hearing is that you think the frequent rate cases are justified. Is that correct?
I think they're aligning with capital investments, and no party that I'm aware of has challenged the prudence of those capital investments. You know, the cost responsibility, yes. The timing of whether or not they'd be in service during a forecasted test year is an issue, but the actual prudence and need for the investments has not been challenged. That I'm aware of.
Thank you, sir. That's all of the questions that I had for you. Hearing Examiner Ryan, any questions for Mr. Gorman?
I think he might be.
Unmute yourself.
Sorry, forgot I was muted. My apologies. Mr. Gorman, I just wanted to follow up on the last conversation you were having there, or the last point of discussion you were having with Ms. Hurst. You said at some point, an increase to rate base will result in eventual slowdown on, what was it?
Rate base. The growth in rate base.
Oh, okay, so could you explain that? How does the increase in plant eventually slow down the growth in rate base? If I heard you, is that what you said?
That is.
Okay, could you explain that?
I will. Over time, rate base declines by the company as they recover depreciation expense and
Okay,
they build up accumulated deferred income taxes. So post-test year, there's reductions in rate base by collection of those items. Those reductions in rate base are offset by additions to rate base, by plant and service capital investments that are placed in service, then increase the gross plant investment. Rate base tracks net plant investment, which is the offset of plant additions less the buildup in accumulated depreciation. As rate base grows, the amount of annual depreciation expense increases. The utility's ability to spend capital investments on plant is limited by qualified engineers, access to capital markets. So there's a limit on how much they can reinvest in rate base year over year. But as the amount of depreciation expense they start to recover from customers increases, as plant investment builds up, then it will become a larger portion or larger offset to the actual plant additions they make to rate base over time. And as that happens, the net increase in rate base begins to slow. Also, as part of the math, as the net increase in rate base becomes a smaller number, you're dividing it by a larger rate base denominator. So the percent growth in rate base also slows over time. What I would expect to see that even if the company maintains an elevated level of capital spending, the percent growth in rate base that they've experienced over the last few years will start to slow going forward because of the increased amount of depreciation expense they're recovering from customers. And that being a larger percentage of capital investments they make each year. And then the net change in that producing a slower growth in rate base over time. And when that rate base growth starts to slow, the frequency of rate case can be expanded.
I'm gonna have to think about that for some time. I believe I followed you, but whether I could restate back to you what you've just said in the way that indicates my understanding would be a challenge. But now I will review those words you've just spoken in some detail when we receive the transcript. I mean, I guess the only question follow-up I'd ask on that is Ms. Crane indicated that yesterday during her testimony that New Mexico Gas Company, like many others, and this was her opinion. I don't know exactly what it was founded upon, but she did say this, are seeing growth in rate base as a way to appease or attract investors. Is that correct? Am I understanding?
Yeah, the investors love the utility industry now because of the growth in rate base. That's true. And you know, that throwing a little more issues on this because that there's a long story behind growth in rate base. But one reason why utilities growth outlooks are so robust right now is because they aren't covering rate base growth with just internal funds. They have to go to external markets to get additional debt and equity capital to fund investments in rate base. And that is creating short-term kickers in the growth rate for utility equity shares. the publicly traded utility equity shares right now. So growth in rate base is a major engine for growth in shareholder value. But it will slow over time because the need for external capital will start to slow as the amount of internal capital generated from utility customers provides adequate funding for rate base growth later on.
To the extent to which you could refer to that as a strategy of some kind, I'll just use that word to describe what you just were discussing there. That strategy, what is the consequence of that for the ratepayer? Is there a generalization you can offer, or?
Well, when we set rates, we want to ensure that ratepayers are fairly treated as well as shareholders. So a lot of this rate base investment, we talked about whether or not it was prudently incurred or whether what it was really needed. There's really no challenge as to whether or not it's needed for system modernization and expansion of the utility system. So there's no pushback on the utility that they're making investments that they shouldn't be making. So the consequence of that is there's going to be more frequent rate cases as the utility's rate base grows right now. But my perspective is later on, the frequency of those rate cases will slow down because the economics suggest that rate base growth will eventually start to slow, even if the utility maintains elevated level of capital spend. And the reason that will happen is because the rates utility ratepayers are paying will increase, which will increase internal generation of funds available to the utility, which will reduce their need for external capital, which will, again, slow not only the growth of rate base, but slow also the earnings and dividend paying ability of the utility.
Does the ratepayer's appetite for rate increases factor into that analysis? Like that strategy? Is it a sort of is one wall there? What is acceptable to the variety of stakeholders in commissions? Where does that come into play? I guess my really question I'm trying to ask you is, it seems like this inevitable ratcheting up. And at some point, I assume consumers are like, well, I don't have any more money. And when does that point get reached?
Well, that's why we're negotiating, and that's why we're before the commission, that we can't reach a resolution of this issue, because the customers on one side of the table want competitive rates. They don't want an increase that isn't justified. On the other side of the table, the utility is obligated to make necessary capital investments to maintain system reliability and to connect all customers to the system. So that there is room there for negotiations, and in the event we can't resolve issues on the table, then they go to the commission for final determination. The customers don't want rate increases, and they certainly don't want unjustified elevated levels of rate increases.
Yeah.
And that's why we work with the utility to resolve rate setting issues.
Yeah, and I guess my only, and it's not so much a question as it is, price increases for, CPI increase, right? Like at some point, there will come a time, it seems, just given the environment we're in, where people literally have no more money to spend. And I'm that's a macroeconomic question, which I realize is somewhat speculating, but how can the ratepayers afford that in the long run?
It's certainly something to keep in mind. Affordability is not only critical to customers, but it's critical to the utility too. If utilities can't pay their bill, the utility's financial integrity will erode.
I understand. When you said earlier, just changing the subject, that the company was overly optimistic regarding plant in service, you use those words when speaking with Ms. Hurst. I was hoping you could answer, why were they overly optimistic? Was this just a product of you're anticipating too much work and you don't have enough labor to achieve that? Do you have an explanation as to why they were overly optimistic in your view?
That's my interpretation of their forecast. The company probably would not agree with that, but my interpretation is that the company was expecting to place plant in service sooner than a reasonable estimate of when they would be capable of placing plant in service. And based on my assessment, that would have pushed certain capital investments outside the test year and thus remove it from rate base.
Okay, and I guess just for clarification, they're overly optimistic just simply because you can't put main in the ground at that pace. It's just not feasible. Is that?
Generally, yes. They have to prioritize capital improvements, and there's only so many qualified engineers to manage the construction projects, so many qualified technical people available to actually install the infrastructure. So there's limits on what can humanly be done, and it's largely capped in the amount of qualified personnel.
Ms. Hurst has been at this much longer than I have, and she asked you some questions about rate 70 and your clients. And I hope you could answer for me, why is it that there is a focus on your clients and rate 70, and what is that rate? And can you just sort of fill in that explanation?
Well, the focus for rate 70 for me is that's the rate schedule that my clients take service under.
And those clients are what types of clients exactly?
They're transportation customers
Okay.
that don't buy gas directly from the utility, but do buy delivery service from the utility. But our focus is to ensure that the rates we pay reflect the company's cost of providing that transportation service. And our assessment is that the company's originally filed revenue requirement was higher than what should have been found to be just and reasonable. The settlement accomplished that correction to that compromise on the company's cost of service, and what we found to be a reasonable conclusion. The spread of the increase in revenues across the various rate classes, we think align better with what we think to be the cost of service when you provide proper classification of customer demand of both transmission and distribution networks, relative to what the company had done in their fully allocated cost of service study. So we think the proposed spread of that increase across rate classes does move each customer's rate towards cost of service, but doing so in a gradual manner without any unnecessary increase to any single tariff rate schedule, and without an increase in certain rate schedules that is not too burdensome.
There's a discussion in your testimony generally about the compromise and the benefits of the compromise. And I just was curious if you could answer this question, which is, yesterday when speaking with Ms. Crane, the question became, well, where were your numbers in all of this in terms of your own independent analysis? And to the extent to which there were compromises, did you achieve the numbers that you thought were? And so she was a little cagey with exactly what the return on equity she was wanting. She referenced a number in terms of what revenue increase she thought was reasonable, and I think it was like 900 or 800,000 less than, or maybe it was 900,000 less than what was in the stipulation. Can you offer any guidance? I mean, in terms of your own independent analysis, where did you fall on these matters? Just the sort of core drivers of these things. Yeah,
I'd be happy to. I was also heard Dr. Morin's testimony where he said the gas industry authorized ROE for this year was around 9.5. I don't agree with that. I think it's 9.35 is the average ROE for gas utilities. The settlement's 9.375 aligns with that. The capital structure of 52% equity, 48% debt, we think is an adequate debt equity mix to maintain adequate credit metric protections for this utility, with a 9.375 ROE to support its investment grade bond rating. Utility only has a bond rating from Fitch, which is unusual. Most utilities have bond ratings from Standard & Poor's, Moody's, and Fitch. So that was a point of interest to us in investigating the financial review of this company. But the overall rate of return included in the settlement, we thought, was reasonably in line with what has taken place in the market this year, and reasonably aligns with what the market cost of capital is today. The 9.375 we thought reasonably aligned with the company's the market circumstances that existed at the time of the company's last rate case in 2018, when the case was settled without a specified ROE number. Capital market costs today have increased more recently because of Federal Reserve actions. Interest rates, even long-term interest rates, have jumped up more recently, but those increases in long-term interest rates today align with what they were in 2018, a time period where the authorized return on equity was around under 9.5%, around 9.35% for most utility companies, gas utility companies. Utilities have maintained strong investment grade bond ratings and access to capital based on regulatory decisions over the last few years. We also noted that while capital market costs did decrease considerably during the pandemic, most authorized returns on equity did not follow. Observable bond yields down during that same time frame. They stayed in the 9.3 to 9.5% area.
And if I can intervene just for 1 second and ask you a specific question, when you were considering the total revenue requirement, did you, I mean, it sounds like both you and Ms. Crane agreed that increased costs were in fact a justification for the request for the rate revisions. Is that correct?
That is correct, yes.
You think that they are justified in asking for some form of increase because they're living in a higher cost environment?
Well, the rate base has grown, so that justifies an increase in rates. Some of their operating costs have increased. Capital market costs, we don't think have increased relative to their last settlement.
And labor costs for them? I mean, that's kind of a big driver, they say, of some of this increase.
Yeah, that is tracking short-term labor cost is tracking short-term inflation outlooks. Importantly, long-term inflation outlooks, which impacts cost of capital, are far less certain than short-term inflation aspects.
So did you have if you agree that some sort of revenue, did you independently reach a conclusion as to what the revenue increase should be? Because, again, Ms. Crane had a number in mind and she sort of shared that with us yesterday.
We did not come to a bottom line recommendation. We did have a range of estimates and the settlement fell within the range we were at.
Did you, you saw Mr. O'Donnell's testimony that, in his estimation going back, looking at the 317, case number 317, just to shorthand that, if you go back and do the follow-up and examine how things washed out regarding projections versus reality when time passed, it seems like the document you submitted indicates that you're not necessarily in agreement with Mr. O'Donnell about the 13%.
I would have to look at that more specifically to say whether or not I'm in agreement with him or not. But we did look at past trends in capital investments and growth and rate base and past trends and changes in operating expenses as part of our review and measuring what we thought to be an appropriate test year revenue requirement in this case. And based on our review, we found that the settlement produced a reasonable result for both the company and customers.
Well, and I guess I'll just, this is your NM area exhibit 2. And if you could just look at that with me, and it might be just easiest to bring it up on the screen since it's not too terribly hard to do that.
Yeah, I have it.
Yeah, and I'll just share it for the benefit of others folks. So we are all looking at it together. So just understanding what I'm seeing here, this was in response to the bench request, and you were basically asked, hey, have you gone back and looked at, from the 317 case, the future test year projections versus what had ended up occurring. And as I read this form, and maybe you can just help me understand what these columns are and then what the numbers represent, you're indicating that there perhaps was a over projection of 3.6 in demand and a total over projection of 1.7, but they came in under for customer related. Am I reading this correctly?
It is, but I'm offering this to show that the company's projections in the last case, which is shown in the first column, how that compared to the test year actual data for year ending 21, reasonably aligned with one another. So if there was forecasting error in the last case, it wasn't very significant.
And Mr. O'Donnell did say, in fact, that his analysis of it was that it was much higher than what you're projecting here. And I asked Ms. Crane about that, and she had an explanation. I know you said you have not looked at Mr. O'Donnell's testimony in any great detail, so I guess I want to ask you further about that. That was all the questions I had for you, Mr. Gorman. Thank you very much.
Thank you.
Mr. Gorman, I'd like one clarification, based on a question that hearing examiner Ryan asked you in your answer. And that was your opinion on the average ROE. I believe that you testified that it was your belief that the average ROE being utilized in the utility industry now is 9.35. Is that correct?
Yeah, for calendar year 2022, for regulated gas delivery companies, the average ROE was 9.38%. And that's as of a report dated June by Regulatory Research Associates.
And who are they?
They're a division of Standard & Poor's Market Intelligence, and they have for decades tracked regulatory decisions and compiled information from final commission orders and utilities' original requested rate changes and tabulate those findings.
And are those actually cases that were decided this year?
Yes.
And is there any further distinction about whether or not those were stipulated or litigated cases?
They do offer that detail. I do not have that detail with me, though. That is a average of both stipulated and litigated rate cases for the return on equity for gas delivery companies.
Thank you, sir. Additionally, you testified in response to hearing examiner Ryan's questions with regard to I guess the same topic, that gas company is currently only rated by Fitch. Is that correct?
My understanding, yes.
Do you have an explanation? I mean, is that usual for a public utility to only be rated by one of the services?
It's unusual to only have one rating, and it's unusual if they do have one rating to not be from one of the two major rating agencies, S&P and Moody's. Never really asked the company for an explanation of that, but it was an issue that made us dig a little deeper into the credit metric review of this company and their funding plans historically and prospectively. And we did not uncover anything that was noteworthy based on that review.
Do you think it has anything to do with the corporate structure and the parent company being Emera?
I would have to speculate on that. I really don't know why they only have a Fitch rating and not an S&P or Moody's.
Thank you. That's all the questions that I had for you, sir. Mr. Gould, any redirect for Mr. Gorman?
Yes, Madam Hearing Examiner, I have one question.
Go ahead, sir.
Mr. Gorman, you talked about the gradual move with this stipulation towards each customer class bearing its cost of service. You also testified that you represent rate 70 customers. My question is, was rate 70 customers' willingness to accept a higher allocation than, say, for instance, residential customers, part of that move to accepting responsibility for the costs they impose on the system?
It is, yes.
Okay. Madam Hearing Examiner, I do have one question for you, which is, do you want us to get that RRA, excuse me, get that RRA report that Mr. Gorman testified to and make that an exhibit in the Dropbox?
That's is that a confidential report?
I
Mr.
do not,
Gorman?
I do not know. Mr. Gorman?
I'm sorry. Uh, Can you repeat that, Peter, please?
He's asking whether or not I want to issue a bench request on the report that you referenced on the 2022 ROE.
It's a subscription-based report, and it should not be publicly disseminated, but I can provide it to the parties in the case if it is treated as, copywritten material, confidential material.
I don't think so, Mr. Gould. I mean, I think we have the general
Thank you.
witness's opinion and the reference that he utilized that for.
Thank you. And one more thing, I keep on getting messages from my internet provider that my internet connection is unstable. And we're investigating why that is in fact the case, but I wanted your permission to keep on listening to the hearing, but to take my video off. That seems to help, if that would be
Well,
acceptable.
I think, Mr. Gould, that you were around then, I know. Many years ago, decades ago, there happened to be a problem with the lines, and a gopher was blamed. It was during the times of a labor dispute with the telecommunications company. I've seen recently in the newspaper that when there's been a lack of electrical service, a crow was blamed. So I don't know what to tell you about your situation there, Mr. Gould. You just may have to sell that motorcycle that you took the trip on and upgrade your internet. What do you think?
I think I'm going to go outside and chase off the crows instead.
All right, very well. You're finished with your redirect?
Yes, ma'am. Thank you.
Very well. Anyone have any questions of Mr. Gorman based upon Mr. Gould's redirect, hearing examiner Ryan's questions, or my questions? Hearing none. Thank you very much, Mr. Gorman. Sir, you are excused.
Thank you very much. Appreciate it.
Mr. Gould, anything further from New Mexico area?
No, ma'am, that is our entire presentation, and thank you. Appreciate it.
Thank you. And I believe now we will be moving to the presentation of staff witnesses. I think this might be an appropriate time for our 10-minute recess. I have 10:15. We'll come back at 10:25. And I believe that in the proposed order of witnesses, we'll begin with Mr. Tupler. Very well. We're recessed for 10 minutes.
Mr. Black, how many witnesses do you have?
Three, potentially four.
All right.
Okay. I think we are. It's 10:25. We're back from our morning recess and are ready for staff's presentation of its witnesses. Mr. Black, good morning.
Good morning, Madam Hearing Examiner Hurst and Hearing Examiner Ryan. How are you today?
Thank you.
Well, how about yourself?
Doing well, thank you.
Yeah, you have a witness, sir.
I do, thank you. Staff calls witness Mark A. Tupler.
Good morning,
For-
Mr. Tupler.
Yes, to be sworn.
Yes, good morning, hearing examiner, Madam Hearing Examiner.
Mr. Lee, would you please swear Mr. Tupler?
Sir, would you please raise your right hand? You solemnly swear the testimony you're about to give in the matter not pending should be the truth, the whole truth, and nothing but the truth, so help you God?
I do.
Thank you.
May I proceed?
Yes, sir, please.
Thank you. Good morning, Mr. Tupler. How are you?
Hi, very well. Thank you.
Great. For the record, would you please state your name and position with the Public Regulation Commission?
Yes, my name is Mark A. Tupler. I am a senior economist with the Utility Division.
Thank you. Have you, do you have in front of you a document that has been previously marked as Staff Exhibit number 1?
I do.
Can you please identify that document?
Sure, yes. It's described as testimony in support of the unopposed stipulation by me.
Was that testimony drafted by you or under your supervision?
It was by me.
Do you have any corrections to your testimony?
None.
Now, if I were to ask you the questions today that are posed in that testimony, would you give the same answers today under oath?
Yes, I would.
Is your testimony true and accurate to the best of your knowledge and belief?
Yes, it is.
Let's see, Madam Hearing Examiner and Mr. Hearing Examiner, this exhibit was uploaded to Dropbox.
What's the number?
Staff Exhibit number 1.
Okay, thank you.
Mr. Tupler, do you have before you what has been previously marked as Staff Exhibit 2?
Yes, I do.
Can you please identify that document?
Yes, it's described as staff response of Mark A. Tupler to the June 8, 2022 bench request.
Was that response drafted by you or under your supervision?
It was by me, yes.
Thank you. Do you have any corrections to that staff response?
I have none.
Is that staff response true and accurate to the best of your knowledge and belief?
Yes, it is.
Madam and Mr. Hearing Examiners, I represent to you that this staff exhibit 2 was uploaded to Dropbox.
Very well.
Madam and Mr. Hearing Examiners, I now move that staff exhibits 1 and 2. Oh, I'm sorry. There's a misspelling on the label of staff exhibit 2. I left out a vowel. I've just noticed that. I'm sorry, but I move admission to staff exhibit 1 and staff exhibit 2.
Thank you, Mr. Black. Staff Exhibit 1, Mr. Tupler's pre-filed testimony in support of the stipulation as verified by him here today, subject to the no objection agreement by the parties, and as entered into the Dropbox as verified by counsel for staff, will be admitted. Staff Exhibit 2, Mr. Tupler's response to the June 8th bench request as verified by him here today, subject to the no objection agreement, and counsel for staff's assertion that Exhibit 2 for staff has been downloaded into the Dropbox will be admitted. Mr. Black.
Thank you, Hearing Examiner Hurst. I now tender the witness for questioning by the hearing examiners.
Thank you. How are you doing this morning, Mr. Tupler?
Very well. Thank you.
Excellent. So, Mr. Tupler, if I read your testimony correctly, in August, you have been with the commission 3 years?
Yes, that sounds correct. Yes.
And you have previously testified before the commission, correct?
Yes, ma'am.
Do you think that we should ever change up the order of the presentation of witnesses? And sometime we should have staff go first?
Madam Hearing
Or-
Examiner, I'm sorry, yes, no doubt, but I know my place, and this is the process and procedure we have. I happily do my duty.
Well, you know, perhaps not before the applicant in the case, but at least first among the interveners. You know,
Yes, ma'am.
staff always gets put at the end. And
Yes, ma'am,
you know,
you'd have my vote to shuffle that around, yes.
yeah, because there might be more questions. You
I'm
think?
all right with that.
Okay. I don't know. I'm gonna think about that. I sort of feel like that, you know, staff gets shortchanged sometimes, especially in long hearings, you know, or as I call it, the Friday syndrome. You know, Friday afternoon, it's like people start looking out the window, you know, back when we had in-person hearings, they probably look out the window all the time now with Zoom, right?
I think that's
Well-
the case, no doubt.
So, you know, so it seems like staff is potentially the benefit gets the benefit of not very many questions. And, but.
Well, I'm prepared for whatever number of questions you
Have
have.
questions?
so
Okay. We
I'll
can
do my
be here through next Friday. You're ready. Excellent.
I know my place, so I will happily accept it.
Well, after all these decades, I don't know mine, sir. So, I congratulate you. I would like to look at your testimony in support of the stipulation, and just sort of generally looking at your testimony on page 4. You're answering the question posed at line 7 through 9. The stipulation identifies an ROE of 9.375%, a capital structure consisting of 52% common equity and 48% long-term debt, and a weighted average cost of capital of 6.44%. Are these components reasonable? And then at line 10, you begin your answer in the affirmative. Yes, the ROE of 9.375 that was agreed to by the signatories to the STIP is in a range that is acceptable to staff. That's your testimony, sir?
Yes, ma'am.
Why is that acceptable to you?
Well, the number 9.375 did fall within the initial ROE range that I established at the start of my analysis for direct testimony. Obviously, the stipulation came after that start, so I used my initial range as what I describe as my range of reasonableness.
And is that the chart that you provided as exhibit A to the bench request of June 8th?
Yes, ma'am.
Can you see it?
Yes. So that is not, the exhibit that's on the screen now is not the range exhibit. I believe that to be the next exhibit or the next item in the exhibit, if I can describe it that way. There we go. Yes, ma'am.
Okay. Guys, got it up there now. And
Madam Hearing Examiner, I think for the record, I should maybe describe that low number of 938. That's simply a rounding of the spreadsheet that I was using. That number, as I input it into the spreadsheet, is 9.375.
okay. So what you're describing here, Mr. Tupler, in Exhibit B to your to staff Exhibit 2, it's entitled ROE preliminary range, correct?
Yes, ma'am.
Okay, so that was what you utilized pre-stipulation, correct?
Yes, ma'am.
And that led you to that provided the information for this range that you're testifying to on page 4 at lines 10 and 11.
Yes, ma'am. Yes, it is.
Did the 9.375 that was stipulated to in the last gas company rate case, did that fact have any merit or importance in your consideration?
I believe I established it as the lower range of, or lower portion of my range, lower data point for my range. So I would say, yes, it does.
Were you Did you have the information of any of the other interveners and what kind of range that they were looking at?
I didn't.
Staff did not conduct any discovery on any of the interveners?
Not at the point this data range was established, no.
What about later on?
I believe I had some discussion. I would say at a general level on ROE with the Attorney General, if I'm not mistaken. But no specific ROE numbers were discussed.
Do you usually do that? Is that a practice? Mr. Tupler?
Yes, I believe I've had that discussion before. I talk a lot about ROE with staff, of course. I believe it to be common practice.
I mean, I just wondered if you ever did it as like a check. If you ever just, once you had developed your range, if you called up the Attorney General's office or had some kind of meeting set up between the parties and just say, hey, this is what I'm looking at. What are you looking at?
Well, Madam Hearing Examiner, I try to utilize a strictly data-driven analysis here. So I like this initial range to be the product of my analysis, independent of any other intervener or any other party. In the prior cases that I've been involved in, I was always curious to see where the other parties landed on ROE and understand maybe the reason they're coming up with a different number than what I get independently. That being said, this range was established strictly on an analytic, data-driven basis.
And let me ask you about that. Further on down the page, you testify at line 18, moreover, this stipulated ROE is also in line with the allowed returns in other states across the Western region within the US and reflects the historical trend in commission approved ROEs. That's your testimony?
Yes, ma'am.
And then you cite to Gas Utilities Industry Monitor Regulatory Research Associates. Reports that the average allowed ROE across 27 vertically integrated gas utilities during 2021 was 9.46, correct?
Yes, that is correct. That's for full year 2021.
And those 27 vertically integrated gas utilities, were those part of what you previously had referred to as being in the Western region?
I don't recall how many of the 27 were in the Western region. Regulatory Research Associates does slice and dice their data nicely by region and as a whole. The 946 is as a whole. So that those 27 cases could be spread out around the country.
And is this the same research group that Mr. Gorman was just testifying about?
Yes, ma'am.
And staff has a subscription to this information also?
Well, I'm uncertain whether we have an actual subscription to that particular document, but I've been able to find it.
Okay. Can you define what the Western region is?
Well, I think when I described that, my intent was to align with another research subscription that we do have available to us in Value Line, Investors Research Service, that does specifically break up the gas utility industry as a whole into a Western and an Eastern region, if you will. They have separate reports. They have separate analysis. They might even have separate analysts for each of those two designations. So I thought it smart to be compatible with that level of regionalization, if I can call it that.
Why?
Value Line is a very respected research tool used by the vast majority of the public markets. My entire career, I've known Value Line to be the gold standard.
So I guess I'm just wondering what is the import of viewing utilities in a certain region as opposed to viewing comparisons or characteristics about utilities as a whole?
Well, I would say that the distinction between East and West has a lot to do with maybe demographics and geography and business practices. Other variables that I think have to be considered regionally in order to provide a more fair and reasonable peer group.
Well, I mean, did you look at the actual characteristics of the utilities in this Western region to see whether or not they did have comparable sizes or customer base or things like that?
Yes, I did.
And did you find that all of the public utilities in the Western region were in fact compatible with the characteristics of gas company?
In the peer group that I established on the exhibit before this range exhibit, yes, I did.
Did you just, oh, I have one more question on that. This 9.46 from the 27 vertically integrated in 2021, was that were those litigated or stipulated RAs?
Madam Hearing Examiner, I believe it was a combination of litigated and settled cases as a whole, as a top line number reported by RRA, just to ensure that I capture the very best average number reported by that credible source.
Did you hear Dr. Morin's testimony and that the average was 9.5?
Yes, ma'am.
Do you have an explanation why your information reported 9.46?
Well, it's a very small 4 basis point difference. It could be rounding. More importantly, I think what I observed as well is that RRA also reported through the first quarter of 2022, the average ROE to be 9.56. Now, granted, that's only for 3 months worth of activity, which I don't think is necessarily a good number to use because it's only 3 months. However, it does show a bump of 10 basis points versus the full year 2021, which may correspond or correlate to just about anything at this point. But it gives me a general direction that 9.5 is still a very accurate number.
Well, did you just hear Mr. Gorman's testimony, who was quoting this same resource group and saying that as of June 2022, that the average was 9.38?
Yes, ma'am, I did catch that. The data is for 3 additional months. I haven't had access to that information. I'd like to reconcile it, of course. But this kind of data speaks for itself. So my assertion that rate.
Do you think it's correct?
I have every reason to believe that Mr. Gorman is sourcing the same data that I am. Again, I'd like to reconcile what that difference might be. And again, it's only for half a year at that point, which isn't reflective of a full year's worth of data.
Well, I mean, based on what you're saying, the whole year was 9.46. First 3 months was 9.56. So Mr. Gorman says now, if you include the first 6 months of this year, it's 9.38. So based upon these 3 numbers, looks like to me it's going down.
Yes, ma'am.
Correct?
Yes, ma'am.
You think that's a trend?
I don't think 3 data points is an accurate trend line, but if you look historically through ROEs, I think maybe a 3-year time frame would be a reasonable trend line. Certainly at least a year's worth of data plus current year data gives you a general direction. And it gives me kind of a feel of where rates are at the moment, if I have to consider that as well.
Well, since what was agreed to is on, would you say it's on the, well, your exhibit B, says that 9.38 is on the lower side of your equity range, correct?
Yes, ma'am.
So then can I surmise that you're pretty pleased that from staff's position, that potentially something from the low end of the range was accepted?
Yes, ma'am. As long as it is within that initial range that I feel comfortable with, I would support it.
Well, if it had been 9.64, would you have supported it? Because that's also within your range, and that, as set forth in Exhibit B, as the high end of your range.
Madam Hearing Examiner, the way I would have approached that, if it was stipulated at 9.64, is that tells me that the return on equity is above the average, which tells me that the gas company is riskier than the average. I've heard a lot of testimony in this case, and maybe previously as well, stating something to the effect that the New Mexico Gas Company is an average company in the gas industry. Thusly, the return on equity should be somewhere near that average. 9.64 would have been too high for me based on the risk analysis. Did I describe that clearly?
Yes, sir. I was just thinking that did basically it sounds as if you would have been comfortable from an ROE perspective if the ROE had been somewhere between the low, the 9.38, and the mid of 9.51, that you would have supported it.
I would support that. Yes, ma'am.
You heard Mr. Gorman's testimony about the only rating agency, which it sounded like he didn't even think is the main rating agency of Fitch, has evaluated gas company. Did you hear that testimony?
Yes, ma'am, I did. And I caught the same issue, I believe, as well.
And does that fact give you pause, Mr. Tupper?
It doesn't in its entirety. Fitch is a reputable bond rating agency as well. I think Mr. Gorman described the top two of S&P and Moody's. Fitch is a third, very close third, I'd call it, as well as industry accepted. I too would like to know how the other rate agencies are not interested or don't provide a bond rating for the gas company, but I would have comfort relying on Fitch's rating.
But you don't have any explanation for why Moody's and S&P doesn't rate them.
If I remember correctly, I believe that it was a recent switch because one of the major bond rating agencies, the top two, if we can call them that, I believe used to rate the gas company. I don't have an explanation as to why Fitch assumed it and the other left it behind. I don't know. But again, I would rely on Fitch just as reasonably as I would S&P and Moody's. I would be comfortable with that. I'd be more comfortable if two of the three provided a bond rating. But
Why?
that decision's way above my head.
Why would that give you more comfort?
In my experience in the investment world, the more analysts you have concurring on certain facts and certain data points, and certain issues, I think the better product you get. It shows kind of a, two eyes are better than one. Wait, did I describe that? 4 eyes maybe are better than 2. I would say that's really the only reason. I wouldn't necessarily pick one over the other of the top 3 that we've described here. They all have their purpose, they all have their place, and they all do a pretty decent job, in my experience.
Do you think that the fact that they appear to only be rated by one agency has any negative connotation that could negatively impact their financial strategies?
The bond rating agencies' strategies, you're saying?
No, the company strategy. So for example, if they're only rated by one of the bond rating agencies, is that something the financial world, when they go out to borrow money, is that going to be of any importance to them?
I don't believe so.
So it's not something that potentially could lead to more administrative fees or higher interest rate loans?
I don't think the bond rating agency has any impact on the bond rate or on the cost of debt, if I can call it that, because ultimately that's what it's affecting. As long as it's one of the major 3 bond rating agencies, and if I can recall from my past experience, I believe the company might have some say in which agency they're using, because I believe there is a cost. I can't recall without verifying this, but my impression is that any company that is rated does have some say on which agency or which bond rating agency they work with.
Okay, I just didn't, it just seems as if one of the frequent recurring themes of the companies that we regulate, if they don't like something that the commission has done, or they think that the commission takes too long on something, they keep talking about, oh, well, it's going to negatively affect our rating and all these bad things are going to happen. So that's why I'm asking you if this is, something that ultimately might, cause bad things to happen, or that they be negatively viewed in the financial world. And your answer is no.
Correct. I could expound on that a little bit further if it's comfortable for
Sure.
you.
Go ahead.
So I don't believe, so you brought up an interesting point. So that would be credit rating agency risk, which is a legitimate risk somehow. I don't believe it to be a downgrade necessarily that they're using Fitch as opposed to S&P or Moody's. Each of those bond rating agencies is going to have a number of risk factors that they evaluate. I can't be 100% certain right here at this moment, but I believe they all have the same risk categories. It might be 7 or 8 different risk categories that they evaluate, that they research, that they assign a value to, if I can call it that. Because they're all going to be the same, companies can move throughout the rating agencies without any major upgrade or downgrade, change in their credit rating, because the rating agencies use the same metrics. Now, they do have a slight proprietary adjustment, is what I would call it. That's why they are in business. I haven't necessarily seen one better than the other, though, in my experience. They all do a very reasonable job of evaluating the risk that they are tasked with evaluating.
Am I correct, though, that if the If the utility gets downgraded, that the cost for them to borrow money is going to be more expensive potentially.
I wouldn't even say potentially. If they are downgraded, depending on where they are, and if I'm not mistaken, most of the gas utility companies are right on the cusp of investment grade versus non-investment grade. And I'd want to subject to check on that. But if they're downgraded, there are serious credit and equity ramifications. A
Have you seen-
downgrade, I'm
Go
sorry, a
ahead, sir.
downgrade means an increase in risk. And risk is measured second by second in the public markets, and their bankers pay close attention to this as well.
Sir, in your exhibit A, you utilize at the bottom. If we can- At the bottom of your exhibit A, it says that you utilize both the DCF and the CAPM, CA, capital C, capital A, capital P, capital M, that you use those evaluation methods.
Yes, ma'am,
Did you read Dr. Morin's testimony?
I did.
And Dr. Morin uses several more methodologies to evaluate ROE, doesn't he?
Yes.
And is there a reason why you chose to utilize just these two?
Yes, ma'am.
And it is,
So early in my duty here, in providing ROE testimony, I did use a number of the other methods. I thought it wise to kind of have a check on the number that comes out. I've learned, of course, that the commission prefers the discounted cash flow method, and I agree with that. Thusly, I trimmed down the methods used to try to provide a data-driven, analytics-based number to recommend to the commission using their model of preference and ironically, my model of choice as well.
and then what would be the purpose of offering up the CAPM?
It's widely accepted, and I think it's a good check on the DCF model. I could take that out as well and be just as comfortable with the number.
Do you disagree with Dr. Morin that the more methodologies that one has, I sort of took away the better you are, because it provides you with more of a comparison and of the numbers?
Ma'am, what was the question? Do I agree or disagree?
Do you either?
I agree with Dr. Morin's assertion, yes.
Do you think that might lead you next time to provide different variations on DCF or some other methodologies to check your preferred method?
I wouldn't steer away from the DCF since that is the commission's preferred method. I read the other testimony to understand the different methods that they're using and just keep my mind fresh with those. But since they're not utilized by the commission, that would be, it would almost cloud my decision moving off of the DCF.
And in coming up with your proposed group for the DCF, you included some of the companies in your peer group, but you excluded other companies
Yes, ma'am.
also, correct?
Yes, ma'am.
And what was the basis of the characteristics that you utilized for your peer group?
So I think most of the interveners start the same way that I do, with a review of the Value Line Investment Survey group of gas company or gas utility companies. There's a number of them, but I slice them down to make sure that my peer group is as fully representative as a peer than some of the others that are in the universe. I'm certain that the other ROE experts utilized at least the companies that I have here. In my experience, though, there are certain parameters that start to disrupt the peer analysis or the peer-to-peer analysis. We get into the apples versus oranges concept that I think I may have heard previously. A $3 billion company is not comparable to a $30 billion company. It's just a different operating process, is the way I see it, as from my previous experience as an investor advisor and a banker. You want to make sure that your peers are truly peers. And I took the methodology that certain companies were too large to compare. They were in a bad geographic location to compare, or they had some, and I believe I started my direct testimony with, it wasn't submitted, of course, but I started it with the parameters that I used to establish the accurate peer group that I have.
And that's what I'd like to know.
Yeah, so it would be size, geographic location, a company involved in a merger or any kind of takeover or related talks, I would say would be a little skewed. Technically too small of a company would be a bad comparison. I wouldn't want companies that are much smaller in the peer group here, because again, it shifts the peer-to-peer process. And there might be one other nominal deciding factor, but I think I captured the main elements here.
Well, it would have been good, Mr. Tupler, if you'd actually given an explanation in your response to the bench request, rather than just giving the chart, so that we would know why you chose the companies that you did. Do you think that 1, 2, 3, 4, 5? Do you think 6 companies is an appropriate sample size?
I do.
Especially when the testimony that you, or the research group citation you included in your testimony talks about a metric of utilizing 27 different companies. I mean, how do you decide 4 is not enough and 6 is okay?
Well, from my peer analysis,
Which I'm not saying that you say 4 is not enough, but
right, I get it. In my peer analysis experience, I'd rather have 2 peers than 50. These companies are segmented enough that they can be narrowed down to true peers. Now, granted, I used the size example as one of the parameters, I guess, of my peer group. In establishing a peer, I think the more accurate your peer group, the better your result. And like I said, I'd rather have even 2 peers that are comparable than 50 peers that are all over the board. It skews the results.
Thank you, sir. That's all the questions that I have for you. Hearing examiner Ryan,
Yes.
any questions for Mr. Tupler?
Just a few. Mr. Tupler, at page 3 of your testimony in support of this unopposed stipulation, you say that staff's derived range of reasonableness is 9.375 to 9.51. And am I to understand that that range of reasonableness, I think if I understood you correctly, came from Exhibit B attached to Staff Exhibit 2?
Yes, sir.
So is that range of reasonableness? I mean, because I'm looking at Exhibit B, and then the high is 9.64, the low is 9.38, which you explained when speaking to Ms. Hurst was 9.375. So should that in fact read 9.375 to 9.64, or do I not understand?
Well, I guess the difference there is going to be in the time frame that these exhibits show. The Exhibit B is what, or it was my original range of reasonableness as I started the analysis for direct testimony. Since the bench request came, and from that range, of course, I refine my number until I find a place based on analysis of the different companies, because that's a major factor here as well, especially for the DCF number. I want to understand what the growth rates of the other companies in the peer group are. So I do a bit of analysis there to understand the reasonableness of those growth rates, because earnings growth are in my opinion, the only thing that the public markets look at in terms of investment. So it's what I focus on the most. By the time the bench requested this material, I was well into my direct testimony analysis, and I was more comfortable with that range of 9.375 to 9.51 range at that moment, versus when I started the analysis with what is now shown as Exhibit B.
I see. So effectively, the 9.64% got knocked out as effectively outside of what you ultimately conclude was the range of reasonableness.
Yes, sir.
And that was
Exactly.
based on additional work you did, and it sounds like refinement through identifying a peer group. Did I hear you correctly?
Perfectly. Yes.
So when you say at the bottom of 20 there, the stipulated, this is again referring back to your unopposed stipulation testimony, the stipulated return on equity is fair, just, and reasonable as negotiated by the signatories to the stipulation. That's an assertion. And if I understand correctly from what I've heard you discussing with Ms. Hurst, your basis for that conclusion are the exhibits attached to Staff Exhibit 2. I mean, is that an accurate statement?
Yes, sir.
Okay. I had additional questions, as Ms. Hurst did, about the writing at the bottom of page 4, referring to the states across the Western region. The specific question I had was what states. If I understood your discussion with Ms. Hurst, it sounds as though you were really not focused on individual states, but mean, really truly the Western region?
Yeah, my initial answer would be yes, but are we talking about the industry average that I've described?
Well, you say at that line, line 18, this stipulated return of equity is also in line with allowed returns in other states across the Western region. And the obvious question is what other states?
Yes, sir. So out of I think we just established 27 cases or what make up that number. I do look through, of course, and see what states they are and try to get an understanding of whether they're all East region, all West region, or a combination of the two until I have a certain comfort level with it. At the time, I was comfortable with it, so I don't have that information right in front of me, but I do recall a number of cases in the Western region that allowed me to make that claim.
And then the source of the information to which you were referring when you were referring, what is that source?
Well, it's the Regulatory Research Associates
Okay.
bulletin.
That's fine. Yeah, I
Yeah.
understand. And that's the one you, Ms. Hurst, discussed and Mr. Gorman brought up as well.
Yes, sir.
And then the next sentence there in line 19, within the US, and then you say, the stipulated ROE also reflects the historical trend in commission-approved return on equities. If you could expand upon that, what is the historical trend in commission-approved return on equities?
So the number has been coming down over the past, I would say, the last decade, if I can at least put some parameters on that, it's been coming down across the board. Let me read through what I said here so that I can put some perspective to it. Okay, so right. So maybe a lower ROE because of a downward trend over at least the last decade in ROE decisions.
Okay, and so that would be consistent with the brief redirect Mr. Dome did when he asked Dr. Morin, would there perhaps be justification for a lower ROE based on the fact that the commission tends to reward lower ROEs? I mean, is that effectively what you're saying?
Well, hearing examiner Ryan, could I understand that question again?
Right. So there was some discussion when Mr. Dome was talking with Dr. Morin about why would the company accept a lower ROE than seems to be justified. And Mr. Dome's question to Dr. Morin was, well, Dr. Morin, isn't it possible that perhaps given New Mexico's, I mean, you use the word historical trend, but the, basic sort of, let's call it trend is that the commission tends to reward lower ROEs. And Dr. Morin basically said, yeah, that's adequate justification. I'm just curious if you're effectively saying the same thing, that you anticipate the commission would likely issue a lower return on equity and thus the stipulation seemed reasonable in your mind.
I would agree with that. Yes.
Okay. And I just want to make sure that I understand the two charts that you supplied, because that, as you indicated, do sort of provide the basis for some of your, I'm going to pull them up.
I've got them up.
Oh, okay. Well, let me just, since I just wanted to be able to zoom in and out on a few things if it's okay, Elizabeth.
Let me get
Ms.
out.
Hurst. Yeah, so.
Maybe I am ready.
Yeah, I
It's
think you
not
are out
green.
actually.
Okay.
Good. So we should be looking, is it big enough for you to read the numbers and everything, Mr. Tupler?
Yes, sir.
Great. Sometimes it's really hard to see as the Zoom controller what the people on the other side of Zoom are seeing. So
yeah, I have a magnifying glass on my end of the computer here just in case.
okay, well, I'll zoom in as much as I can. So, all right, so this group of companies, I'm hovering over the and I guess I'll say for the record, this is Exhibit A to Staff Exhibit 2, Mr. Tupler. And we have on here these Atmos Energy, NiSource. I won't keep speaking because that'll challenge our court reporter, but that group of companies, this is the peer group you reviewed for purposes of coming to your DCF analysis.
Yes, sir.
Okay. And this is the DCF. I'm hovering my cursor at the bottom here, the DCF analysis, and it says 9.51%.
Yes, sir.
That D, the P, and the G, could you please explain what those letters represent?
Sure. In the discounted cash flow formula, which is explained in my direct testimony, but I don't think that does us any good here. It takes what I've done there, or what the formula does is it takes the price of a company, the stock price of a company, the dividend of a company, and its anticipated growth rate. And it stirs it up and comes up with a number that allows you to value the company based on those parameters.
Okay, and so are those D, the P, and the G, the values associated there? Is that coming from the peer groups that are up here?
Yes, sir. You can see that I color coordinated
Okay.
where each of those come from.
Okay, great. I see that now. Thank you. That's actually, now I get the colors. That was very useful for me. Okay. And I guess this on the CAPM, maybe you can explain those abbreviations there too as well.
Yes, sure. So the CAPM, or the capital asset pricing model, is made up of a risk-free rate of return.
Okay.
Which is, usually a treasury bond. It makes sense. There's no risk associated with that, although there's discussion over that. Nonetheless, the established norm is a risk-free rate. The B is the beta of the stock itself, which is measured by a number of rating firms. Value line is, yes, I see from my chart that it is a value line beta that I used, which basically represents the volatility of that particular stock against the market of 1. So the market in total is categorized as having a beta of 1, and the price differential for each individual company is measured using beta, which basically says that in this case, the peer group average of 0.84 is less volatile and correspondingly less risky than the market of 1, compared to maybe a Microsoft stock that would have a beta of maybe 1.5, maybe 2, something along that line. It's all reported, it's all public information. So that covers the B, which is the beta.
Mm-hmm.
Below that is the market return. That 10.5% is an established historic market return that I took from Ibbotson, which is another industry standard of market return data.
Can you
And of
spell
course-
it?
Yes, Ibbotson, IBBOTTSEN.
Thank you.
Yes, of 10.5%, which in my experience is just about the market average throughout history.
For what?
So a good way to explain it would be the S&P 500, which represents the top 500 companies traded in the public market, would have a historic 125-year maybe return average of 10.5%.
Thank you.
So just so I understand correctly, the RF, and I'll have your transcript, so I'll remember what the acronym means, or it's not an acronym, it's an abbreviation. That's comes from outside. That's the T-bill, basically. Is that what you said?
Risk-free rate. Yes, sir.
Risk-free rate. And that you selected the T-bill. Is that what you said?
Yes, sir.
And then the market return also is coming from, I guess that's the asterisk here, the Ibbotson SSBI chart.
Correct.
Okay. And then, so this section of the document here, the credit rating, I think you're just looking at similarities, trying to identify something that's similar to New Mexico Gas Company. Is that why this is listed here?
Hearing examiner Ryan, I would say that that is simply a byproduct of the peer group.
Okay.
That is only, in my opinion, used to evaluate risk when all else is equal.
Okay. And then this far right column here, what is going on here? What should I discern from this information?
Okay, so from my perspective, that is the most important part of this entire chart. It is the estimated earnings growth annually for the next 5 years for each of the utility companies in my peer group. You'll notice that I use not only Value Line, but I use a Yahoo or a Morningstar, I think is what that says there.
Oh, do I understand YF means Yahoo Finance?
Correct, which
Okay.
really behind the scenes is Thomson's Reuters data. And I've used it for an entire career, and I found it to be very valuable and accepted throughout. So both of those are there. But what it's doing there is the analysts are trying to project what the earnings growth looks like, because earnings growth is what drives the stock's price and eventually a company's value, right? As stock price goes up, the value of the company goes up.
Right.
These growth rates here are utilized in the discounted cash flow formula. So they're very important and they move the needle significantly.
Okay, and I see how that, and I recall Dr. Morin's testimony went into that in some depth, and I see that growth, the green translates over to your DCF green coloration. So, okay, and then I guess my last question is here. What is this? What am I looking at under maybe BKH and info only? What is this information here telling me?
Right. So I've adapted this spreadsheet from my start with the commission. So I had some companies that I would think might be comparable that I put in there just so that I, have that, so that I'm not accidentally excluding any company that is maybe close to the peer group. BKH, if I'm not mistaken, is Black Hills Gas Company in South Dakota. South Dakota. I believe that data was updated, or that's relevant data, but I excluded it from the peer group for some reason, and I just don't see it in front of me.
Okay. And then info only refers to what?
So what I would have put there is anybody else that I wanted to just have some baseline information on. I do not believe that line represents any company that we're considering here.
Oh, I see.
It's left over from a previous analysis, I would say.
That's great. Okay, good. So that's very helpful to have that explanation. And I just want to go over, do sort of a similar thing with this, because it is kind of giving us the substance of your analysis. We've talked about the 9.64, and I understand how that gets ultimately removed from the equation. But if you can just explain perhaps these words over here, what am I looking at?
So average DCR ROE from the first version of my peer group analysis.
Okay.
So that spreadsheet above is probably 3 or 4 iterations deep.
Okay. And average DCR refers to, please, would you say what that means?
Oh, so that should be DCF.
DCF, okay.
Yes, sir. I see that mistake now. That's a DCF. That's the old banker talk DCR, wrong ratio, but I'm comfortable that it is DCF.
Okay, good. All right, and so then looks like when we move down here, calculated peer average, it's the same value. You're just doing it for a different, your average DCF return on equity is what this is here. Is that maybe I'm misspeaking.
While we're here, let me do some quick math. my number's coming out a little differently. So that is the calculated peer average of the spreadsheet above now, based on the version of that spreadsheet. Again, that's not the original peer group analysis. It's, like I said, 3 or 4 iterations deep.
Okay. But it's that I understand, but if I understand correctly, that's just the average return on equity for a DCF analysis. Is that correct, what I'm looking at there?
Yes, sir, based on the spreadsheet above.
Right, okay. And that WA column, that refers to weighted average?
Yes, sir.
Okay. And the New Mexico Gas Company long-term debt LTD, and that's taken from Jimmy Blotter's testimony. That's what that information there is telling me?
Yes, sir.
Okay. And then lastly, down at the bottom there, what is this? Low return on equity from the 317 settlement. How does that come in? How did you get that as your low? I assume you're referring to what the 317 settlement was as to the return on equity. Did you use that as your low?
Yes, I did. There was no calculation in it. It was strictly that bottom range from my perspective, because the numbers that I was getting through my analysis, through my peer group analysis, were so much higher. So I wanted to have at least some bottom end bracket for my reasonable, or my range of reasonableness.
Did you review Dr. Marin's testimony in this case?
Yes, sir.
Do you recall the DCF values that he came that were all below 9? It was all like in the 8 point something range. I can't remember what the lowest of all those were, but there were several figures. I won't ask you to go back and look, but I mean, I can assure you that I know that's correct. If you went and look at his DCF analyses, he came out with some 8 numbers, 8 point something. Do you remember seeing that?
I do, yes.
So how do you think he got there if you couldn't find anything below 9.375?
Well, Mr. Hearing Examiner, if I could bring that previous spreadsheet up.
Sure.
That showed the DCF calculation, the P, the dividend, the price, and the growth rate.
Yep.
Those are the only 3 parameters that that come into play in that calculation. So I'm guessing that, or I'm not guessing at this point, I'm certain that some of those numbers are different. I haven't necessarily calculated what they are, but I would guess that it probably has to do with growth rates.
Okay. So Dr. Marin just was utilizing data that you did not in this analysis here.
That would be my presumption, yes.
Okay. That's all my questions. Mr. Tupler, thank you very much.
Will
Thank
you leave?
Leave it up?
Examiner Ryan,
Yes.
will you leave Exhibit A up?
Sure.
Mr. Tupler, I just wanted to ask one question for clarification of the record with regard to staff exhibit 2, exhibit A, with regard to your beta calculation.
Yes, ma'am.
Could you state for the record again, will you quantify what the beta value, the significance of it?
Okay, so there's a strict definition that I could pull up, but I'm going to go off my memory because it's accurate enough, I think, here. Beta measures the volatility of a stock's price against a market average. The market average being 1, which I can say is the universe of investments are designated with a beta of 1. Anything above or below that for individual companies represents their price differential. So if the market in general moves up, if the market, how am I saying this? I got to say it properly. If the market is up $10 per share, if we can say it that, there are ways to quantify that. A company that has a beta of 1.1 is going to be 10% higher than that $100. So they'd be up $110, if I can say it that way. It's a measure of price variability against a standard of the market.
Could it be said that any of these companies, for example, they are all below the one market standard, correct?
Yes, ma'am.
And so could it be said then that the betas for all of these peer groups would indicate that they are riskier than the average market investment?
No, ma'am. It's just the
Okay.
opposite. The lower the number, below one is less risk. Above one is more risk. Industry standard, industry accepted number.
So, okay, well, that answers the question. The lower below one it is, the more favorable the company is going to be viewed as far as risk.
Yes, ma'am.
Thank you, sir. I have no further questions for you. Mr. Black, any redirect for Mr. Toffler?
Thank you, Madam Hearing Examiner. Yes. Mr. Tupler,
Yes, sir.
there was a question asked about you looking back at the stipulation in the previous rate case of 19th 317. Do you remember that?
Yes, sir.
And that the figure that was being discussed or asked about was 9.375%.
Yes.
Did you use that 9.35, excuse me, 9.375% automatically, or why did you use that? Explain.
So I chose that number after I chose the analytic derived number originally. So I did it independently of what has been done before, but as I establish my range of reasonableness, I have to have a bottom number. Just by definition, that's what the parameters of the range of reasonableness are. At that point, I figured status quo was probably an acceptable bottom range. All else considered equal, it was a fair and reasonable bottom end to my range of reasonableness.
Thank you. There was a question, and I wanted to clarify that no discovery was propounded by staff.
Two interveners regarding return on equity.
That was my question. Is that
That is,
correct?
yes, it is correct.
All right. That's all I have in my notes. Thank you.
Thank you, Mr. Black. Any questions from any of the parties on my questions? Hearing Examiner Ryan's questions or Mr. Black's redirect? Hearing none. Mr. Tupler, thank you for your time, sir. You are excused.
Thank you very much.
Very well. I had on the list Ms. Leyba Tercero, but I see that Ms. Ramey is in the waiting room. Is your intent to call Ms. Ramey, Mr. Black?
That's correct.
Very
The
well.
reason being that Staff Exhibit 3 is combined testimonies. And so I don't
Okay.
know what the pleasure is of the hearing examiners about how to authenticate that.
Okay, well, let's go ahead. Ms. Ramey is there. Good morning, Ms. Ramey.
Good morning, Madam Hearing Examiner.
But glad to see you're not at jury duty.
Me
Thank you
too.
for arranging to be here. Mr. Lee, would you please swear the witness?
And would you please raise your right hand? You solemnly swear the testimony you're about to give the matter not pending should be the truth, the whole truth, nothing but the truth, so help you God.
Yes, I do.
Thank you.
Go ahead, Mr. Black.
Thank you, Madam Hearing Examiner. Good morning, Ms. Ramey. How are you?
Pretty good, thanks. Good morning to you, Mr. Black.
For the record, would you please state your name and position with the Public Regulation Commission?
My name is Georgette O'Ramey, and I am an economist in the utility division of the commission.
Thank you. Do you have in front of you a document that has been previously marked as staff exhibit, what is it, 4?
Yes,
Can you please describe that document?
that is my testimony in support of stipulation filed May 31st, 2022.
Thank you. Was that testimony drafted by you or under your supervision?
Yes, it was.
Do you have any corrections to your testimony?
No,
Now, if I were to ask you the same questions that are posed in that testimony, you ask those questions today, would you give the same answers under oath?
yes,
Is your testimony true and accurate to the best of your knowledge and belief?
yes,
Madam and Mr. Hearing Examiner, I represent to you that this exhibit was uploaded to Dropbox. And I
Yes.
move what has been marked as Exhibit 4 into the record.
Staff Exhibit 4, Ms. Ramey's testimony in support of stipulation as verified by her here today, subject to the no objection agreement of parties and pursuant to counsel for staff's verification that the correct copy of Staff Exhibit 4 was entered into the Dropbox is admitted. Mr. Black?
Thank you, Your Honor. Ms. Ramey, do you have before you a document that is has been previously marked as Staff Exhibit 3?
yes.
What is that document?
That is staff's combined testimonies in response to the June 6, 2022 bench request by hearing examiner and to the June 8th, 2022 bench request by hearing examiner for commission staff.
Thank you. Did you prepare any testimony in that combined document?
Yes, I did.
Can you identify, please,
Oh,
by page number?
oh, okay. Yes, my responses are page 1 to 5, ending on, no, I'm sorry, pages 1 through 6 are my responses. And then the other pages are related to responses of other staff members.
Thank you. And did you file an affidavit, or excuse me, an affirmation in lieu of affidavit supporting that testimony for that document?
Yes, I did.
Okay. Was that testimony that you just identified on those pages drafted by you or under your supervision?
Yes.
Do you have any corrections to that testimony?
No.
If I were to ask you those same questions today, well, if I were to ask you the same material that's contained in that document today, would your answers be the same?
Yes, they would.
Is your testimony true and accurate to the best of your knowledge and belief?
Yes.
Okay. Madam and Mr. Hearing Examiners, I represent to you that this Staff Exhibit 3 was uploaded to Dropbox. And I expect that if it's the pleasure of the hearing examiners, we'll wait to tender that or to offer that exhibit until after the other participants have been, or staff members who provided testimony in response are able to authenticate their portions as well.
Very well, Mr. Black. I think that's probably the most appropriate way to handle that. Anything further?
No, Your Honor. I now tender Ms. Staff Witness Georgette O. Ramey for examination.
Thank you. How are you doing this morning, Ms. Ramey?
Pretty good, thank you. And yourself?
Well, I was doing okay till I just dropped my pen, but now I picked it up, so I'm okay. So, Ms. Ramey, you indicate on page 3 of your testimony, staff exhibit 4, that the purpose of your testimony is to provide, upon behalf of staff, the accounting and financial review as it pertains to the agreed upon revenue rate increase in the stipulation. Is that accurate?
Yes, ma'am.
And prior to the agreement, had you spent time reviewing the expenses and the cost of service components in the filing as made by gas company?
Yes, I did.
And could it be characterized that you had any issues?
Yes, ma'am.
With some of their numbers?
Yes, ma'am, I did.
And since we don't have the benefit of any pre-filed direct testimony in this case, how would you compare the agreed upon 19.3 revenue requirement increase as to where you might have landed if it had been litigated?
Well, I guess similar to the AG's concern, staff thought that the application as filed was rather aggressive in its request for the $40 million increase. We were concerned, particularly in the company wanting to add, say, 32 new positions to its operations. So, you know, we would have, we were on track, I guess, to recommend a much lower revenue requirement than requested.
Well, since staff ultimately agreed to the $19.3 million revenue rate increase, can I conclude, Ms. Ramey, that the number that was agreed upon was in line with what staff thought was a more appropriate
Oh,
revenue
absolutely.
increase.
Absolutely. And especially, since it did wind up pretty much half of the original request, we felt that it was more suitable, especially under the current economic conditions and the post-pandemic issues that we are all facing right now. We felt that it was a more reasonable revenue requirement.
Well, did you have, did you have you listened to the prior testimonies this week?
Yes.
Did you, I guess if I wanted to characterize, different interveners have different interests and different things that they concentrate on, don't they?
Yes.
Whereas staff has to concentrate on pretty much most of the issues in the case, don't they?
Yes.
Right. So from your perspective and your job as part of the staff team,
Mhm.
did you have some buckets of proposed revenue increases or proposed expenses that you thought, no, this is not reasonable. We're going to have to talk about this.
Oh, yes, ma'am. Absolutely. Like I said, definitely the addition of the request for all those new positions, especially since we saw that they had, high vacancy rates as well. We were concerned with, for instance, the STIP proposal to the STIP being the short-term incentive plan that the company uses for, incentive compensation, to increase that maximum from 6% to 10%. We thought that was an issue. Let's see. There were several that.
What about the labor? I mean, I realize that that what you just referred to, the incentive plan,
Mhm.
and then also the addition of the position. Did staff have any other concerns with regard to the labor costs?
Yes, but we realize, I think that, currently everyone is trying to hire people, that it seems to be a national issue, trying to retain employees and hire and fill positions. There are some upward pressures happening, inflation-wise, supply chain issues. So we know that costs in general are going up. And so all companies, I think, are adjusting and adapting to this new environment that we find ourselves in.
From your perspective on the job duties that you have in this case, is your job made any more difficult because of the shared expenses component of the filing?
A little bit, but it is common, to have affiliate transactions with utility companies. With at least with New Mexico Gas, they pretty much presented a good set of supporting documentation in their schedules and identified everything pretty clearly, explained it well in the testimony that was filed.
But I note on your in your testimony on page 7, question posed at lines 12 and 13, based on its review of New Mexico Gas Company's cost of service, does staff believe that the revenue increase provided the stipulation was reasonable? You begin answering on line 14, yes, staff submitted 6 rounds of data requests to the company, both informal and formal discovery. You also say staff reviewed the responses to those data requests as well as responses to data requests propounded by the interveners in this proceeding.
I'm sorry.
What-
Jed.
Why,
I'm sorry, Jed, you trailed up as well as
the responses to data requests propounded by the interveners in this proceeding? So, Ms. Remy, why is that relevant to whether or not the revenue increase is reasonable?
Well, several of the data requests that staff submitted to NMGC were scenarios to modify the models for the cost of service and the fully allocated cost of service, the COS and the FACOS models, to make changes to various components in those models to determine various, I guess, data points is the best way to describe it, for some of the, I guess, possible proposed revenue requirements that staff was considering. And that's how we, determine various, I guess, a range of where we thought the revenue requirement should be. So we modified, for example, using Mr. Tupler's ROE and capital structure. We modified those inputs, and then we made changes to, say, reduce the number of new positions, and those. So we made various changes in the data request to be run through the models, and then we received, what the revenue requirements were to help us in determining what we were going to file our testimony on, but we didn't do that. So then we wound up, having that data to use in the settlement negotiations.
I think it would have been better for the commission as far as having information prior and after. If I had just denied the motion and had staff and the interveners file their testimony after the STIP had been settled.
Possibly, but like some of the other witnesses had said, earlier in the week, once those positions are, I guess, officially in the record, it can impact how the settlement discussions may go.
Do you agree
It
with
was a
that?
lot. I'm sorry.
Do you agree with that?
Yes.
Go ahead.
I do. And I think, because as you stated earlier, the interveners, all have their different positions and goals, and, staff's role is to balance them all and hopefully be fair, just and just to all the parties involved. It takes a lot of time and effort, whether you do direct testimony or stipulation testimony. And I must state that staff was working on both at the same time because we weren't quite sure how things would progress. So it was difficult, and we had a lot of moving parts to focus on, and we think that in the end, this was a little unusual to have a stipulation entered into, before direct testimony was filed. But in the end, it was a good outcome. It probably saved some resources, but I'm sure all the parties involved were really working a lot of extra hours to accomplish this stipulation. The discussions went on, for a couple of weeks.
Okay. And you say at the bottom of page 7, beginning at line 19, specifically, the stipulation fully addresses concerns that staff had regarding gas company's proposed rate of return on equity, capital structure, plan addition, operation and maintenance expenses, and income tax. This is on page 8, lines 1 and 2. Staff was pleased with the process and the reasonableness of the outcome of the settlement. So I take that to mean then that any issues that staff had on the enumerated categories that you listed on page 7, staff either felt that you got a reasonable accommodation, or in the interest of negotiation, some things get subsumed and ultimately led you to your characterization that the outcome was reasonable. Is that correct?
Yes, ma'am. As I said, negotiating a stipulation, especially with so many parties involved, there's a lot of give and take, and everyone makes concessions. I guess no one gets everything that they want, in the spirit of progress. But overall, it was a good stipulation. I think especially the in terms of the overall requirement. But that was also, as you had mentioned earlier in the week, I think during the hearings, how they have come in NMGC fairly frequently these last few years, and with rate increase requests. And so we look at all of that, and part of, I think, staff's view was that, in the last rate case, they only got, a couple of $1 million increase. And so this filing was, the request was a lot more, but, because of the settlements that had taken place previously, that the company probably really did need, a good rate increase this time to support its operations and attain, some of their priorities and goals in a timely manner.
Did you participate in case number 19-00317?
Yes, I did.
And that case was resolved by stipulation and an agreement to have a revenue increase of $4.5 million. Is that correct?
That sounds about right.
Before I ask about that, I just wanted to finish up one point on the reasonableness and the staff's position on the reasonableness of the stipulation. Did you feel even potentially more confident of the reasonableness of the stipulation based upon sort of the last minute, $938,000 adjustment, 180, 938, 180, because of the interplay between the 5% merit and the new transportation contract? Or did you consider that at all?
Well, it did lower the revenue requirement overall from 40 million to 39. So we thought that was a good move since it decreased it a little bit.
I think Ms. Crane I think she said it was kind of a bonus.
I'm not sure of her
Okay,
verbiage, but
okay,
yeah.
well,
Because
it was positive.
it decreased it overall. It did
Okay.
decrease the overall request.
Well, I just wondered if it had any impact on the fact that you had settled for 19.3. You know, if it gave you, some comfort or not, or had no effect. Sounds like it had no effect.
Well,
So
it just was like, okay, it's a little lower, so we can always appreciate a lower request in revenue
Sure.
requirement.
okay. And then so we're talking about the frequent rate cases, and
Excuse me.
the question I wanted to ask, as the person who, has the accounting responsibility to look at all these numbers, you've heard the testimony earlier in the week of hearing examiner Ryan and myself concerning rate case expenses in this case.
Yes, ma'am.
And you looked at those?
Oh, yes.
And as my father would say, how sharp was your pencil? I mean, did you think any of those, you think any of those expenses are give you pause, or, were you fine with the proposed expenses?
Not quite. I would say that the rate case expenses are always a concern of staff. And we do question, some of the processes that are used in I guess hiring some of the consultants. I recall, one issue that staff had in the previous case, and that was something, like I said, that I looked at since I was part of that case, is that we had proposed because in the last case they were quite high, and we were concerned that the company was not doing requests for proposals, and we had recommended that, but since it was stipulated, the company did not do that in this case. They retained pretty much the same consultants, which is not unusual. The expenses were lower, so we were pleased with that. But they were still, on the high side, above $1 million.
Well, Ms. Remy, what kind of tools do you use, for example, when you're evaluating a particular cost or expense? I mean, if somebody comes in, and I think hearing examiner Ryan ask questions about the rate case expense for Mr. Yardley's, who I'm sure you're familiar, did the fully allocated cost of service. I think it was to the tune of $825,000. So how would you look at that number and try to evaluate the reasonableness of that number? Or do you just look at the total amount and not the components?
Just for clarification, it was 225.
Oh,
Ms.
sorry.
Hurst. That's okay.
Okay.
Whoa, I'm trying to get Mr. Yardley a raise.
It
I
just,
apologize. $225,000.
it just depends. I'll compare, to the previous case. Sometimes we'll in discovery, the actual contracts get requested, so we look those over. We try to look at the supporting documentation and, determine whether it seems in line with, what else is going on in other cases.
Okay. See, I have no idea of, I'm assuming that sometimes staff, and I know at least in the past has utilized consultants, and I guess you can use your own experience. But I just wondered if there's a rule of, I'm sure probably, some HR organization probably offers that service, but how one would be able to differentiate, well, this expert witness, 25,000 is fine for this one, for what they're doing. And no, it has to be, X number for the next one. And actually how one looks at that number to try to come up with a reasonable valuation, or do you just take the company's word for it? Here's what we pay, and this is
No, like I said, we'll staff and the interveners tend to request various contracts through discovery, so we can review them. Like I said, we'll look at various expenses, compared to other cases, say the type of expertise, as you say, and we do have consultants that we use sometimes, and we ask them, does this seem on par with what else is going on in the industry or in the country and in other at other commissions. So we try to cover various bases to ensure that the costs are reasonable. And if we find that it's not, for instance, say if they want to, they list in the information filed, that they're paying a consultant, $700 an hour, and that, the average, based on our research and information, says that it's more like 400, then we're like, no, we're not going to let you pay that from ratepayers. If you want to pay a $700 an hour consultant, your stockholders will have to pay the difference. We're not going to allow that.
Okay. If we can move on, your testimony on page 9, you're answering the question posed at line 2, what other terms of the stipulation does staff find beneficial to ratepayers? And you testify on line 4, besides providing a lower rate increase, staff finds paragraph 17 through 20 of the stipulation will be beneficial to ratepayers because it provides for the withdrawal of the proposed integrity management program cost recovery mechanism. That's your testimony?
Yes, it is.
So do I understand from this testimony then that was an issue for staff, and that staff was opposed to the integrity management program rider mechanism.
Yes, historically, staff has continuously opposed it.
Why?
Because well, I don't go into it too much, but we feel that it is unnecessary. It's a mechanism to shift the cost from the stockholders to the ratepayers. It's just sort of unnecessary because they are going to do these improvements, and we just feel it would be more pertinent to just wait and include it in rate base once the projects are completed. But we have agreed to the regulatory asset established, and that was from the last rate case. And we have, between the parties and staff, have implemented some guidelines to say, well, this is only going to apply to these types of projects, which has been discussed quite a bit. And so it does give the company the opportunity in the future to possibly recover everything, but it just kind of postpones it until that time, which is what, like 2025 or something like that.
Okay. Further on down on the page, you testify in paragraph 28 of the signatories agree to provide gas company with guidance
Right.
needed to record transactions in its books and records.
Right.
That historic accounting treatment by the company can be carried forward. So I'm a little, I need you to explain. Hasn't there already been a whole lot of guidance during this case? And what are you referring to specifically? I thought, that there were like accounting rules and all that kind of thing. What's all this mean?
Well, that actually was the response to the bench requests that the hearing examiners issued. And so it just, like you said, there are a lot of accounting guidelines that have to be followed, be it, FERC regulatory, Federal Energy Regulatory Commission, or, GAAP, generally accepted accounting principles. So there are a lot of rules that do have to be followed. And so, we all rely on those because if you don't, it can cause some major issues. And so it's just a matter, I think, of having the flexibility and the to protest and say, no, we don't support what may be recommended in terms of some of the expenditures that the company will propose. So I think that's mainly it.
Okay. You don't think this is trying to micromanage gas companies' accounting practice?
No, we do not micromanage. And that's the perfect example would be, staff recommended a request for proposal plan to hire their consultants, but the company didn't do that. In the end, we can recommend and strongly encourage them, but it is the company's decision how they will spend, this $19.3 million based on what their needs are. And that's the bottom line. We really
Okay.
don't tell them where to spend it. It is at their discretion.
Okay. So you can offer guidance and they can choose not to accept it.
Yes, unfortunately,
Okay.
that's the reality of it.
That's the reality. Well,
Yes,
I
ma'am.
appreciate that. Oh, I have one more question for you, ma'am. Page 10 of your testimony, you are giving concluding remarks. And at line 20, and you say, the terms of the stipulation preserve the ability of the signatories to address many issues in the company's next rate case, continuing on page 11, before the commission. That's your testimony?
Yes, ma'am.
Ms. Brady, they filed 3 rate cases in 4 years. They're going to file another rate case, presumably by the end of 2023. The three rate cases, including this one, have all been stipulated. So when do you think some of these issues that keep getting moved are ever going to be resolved if cases keep getting stipulated and the issues keep being deferred?
Well, Madam Hearing Examiner, I really share your concerns. And I really don't know the answer to that.
Well, I'm just asking you because apparently you think it's important to put that sentence in there, right?
Mhm.
And as a concluding remark, you're talking about preservation of issues as being important to you.
Yes.
And I mean, I don't know, is it just like putting money in the savings account? You know, you hope you don't have to rely on it and it just stays in the bank forever?
I guess that's a good analogy, actually. But hopefully, you know, as I said, that when you're doing these negotiations, you really don't, I guess, what's the word I want to say? You really don't get to, unfortunately, you really don't get to say itemize all the issues that you would like to. And that's just, you know, part of the process. So things do tend to happen and we just have to sort of accept them because that's what the company has decided to do. Because it is at their discretion how they're going to spend that bucket of money. And so, you know, when rate cases are filed, you know, you plan to go through the whole process to litigate, but, you know, if you can get a very good outcome through stipulation, you know, that is the best course. Because it does tend to produce savings for all the parties involved. And I think in this case, you know, going from a $40 million or $39 million revenue increase request to 19.3, I mean, the numbers sort of speak for themselves. And so it's just those concessions that we have to, I guess, sort of live with until we get to the point of, you know, actually litigating every issue that has concern, you know, has concerns to staff and the other parties.
Yes, ma'am. I guess, and I'm learning more, I'm not in a position to know or to be in the negotiation. So that's sort of has not been my function. So that's why, I ask and I learn from finding out from the witnesses, what that is. And I appreciate your perspective in hearing that. I just, again, and it's not so much, it's puzzlement, I guess, at this point of, just trying to put the cases in context, also to put in context of not knowing things that but also in terms of, if I was going to buy a house for $100 and all of a sudden they said, oh no, we'll take 50. Okay. So like in this case, take half. Well, if the house really is only worth 25, it's not a good deal, is it? So when people settle on a revenue requirement increase, I still have to be assured that the underlying amount that they're asking for the increase on is reasonable, don't I?
Yes, ma'am.
And, and if the parties can assure me that it's not just the increase, but it's all the underlying things that I don't get to hear about and that aren't litigated, that have been considered, then, I think that gives me some support for understanding the party's position.
Right. And I understand what you're saying. And I think a lot of that has been discussed, especially by the NMGC witnesses. And as I stated earlier, staff's view was that the application was very aggressive, and maybe even unrealistic. Like I said, the perfect example would be, wanting to hire all these new positions. The company's witnesses said because of the lower revenue increase that we have stipulated to, they will have to make some adjustments and postpone those hirings, make do with the operation as it is, and focus on retention of their skilled labor to maintain, safe and reliable operations. And that, the impacts of, supply chain issues in getting their projects completed and the supplies and parts, et cetera, that's beyond their control, and it's definitely impacted. So we think that, the details that you say aren't necessarily privy to have been, I guess, realistically reviewed, and adjustments will be made, just to ensure the operation, maintain, the system, provide, some decent customer service and so forth, within a budget that they've been given. So, we take comfort that, this should do, over the next couple of years, and just see how it pans out, with the economic conditions that we are in right now. I guess
Okay,
that's the best way that I can
okay.
explain it to you.
No, no, and I understand and I wasn't necessarily referring to, you know, the negotiated discussions I wasn't privy to. I'm just saying that I have to be comfortable with the underlying information.
Of course.
I mean, on a stipulation, I get to hear a lot about, here's what we agreed to, and it's like, no, before I get to the roof of my house, I have to understand how the foundation is built, so. I appreciate your time, Ms. Raymond. I don't have any more questions for you. Hearing examiner Ryan,
Judge, I would like to take a break.
okay, we're gonna take a 10-minute recess and I have 12:35, we'll come back at 12:45. During the recess, parties should consider whether or not we want to go ahead and take a lunch. We have one more witness after we conclude with Ms. Ramey, or if we want to try to go through and the person that gets the most votes is Mr. Lee, our court reporter. So we are recessed for 10 minutes.
Hey, am I doing okay so far? Okay. Okay. Oh, we didn't? Oh, okay. Okay, I might even have that. I think I have the binder for the last. Oh, wait, no, the binder has their testimonies, not our testimonies. Okay. Yeah, but I muted it. You're hearing me? Oh, geez, okay. Okay, I thought I had muted, but maybe that was mine. Okay. Oh, okay. Geez. Okay. I thought I had muted it, but okay. Okay. Well, maybe I should just get out and then get back in. No. Oh, I know where it is.
Okay, now you're offline. I mean, now your microphone is silenced. Everyone has been hearing what we've been saying. Now your video is frozen.
I don't mean to intrude, but it looks like you guys successfully figured out what you were trying to do. Georgette is muted and was not frozen before she turned camera off.
Wait a minute. Okay. Sometimes I have my challenges.
We can hear you now.
Yes, thank you.
I'm ready when you are, Judge.
Before we go on the record, Mr. Lee, do you have a preference if we go ahead and take the lunch hour? We have one more witness and
I would suggest we just finish the last witness. But it's up to everybody else.
You're okay if we just go ahead and finish this witness and the next one?
Yes, ma'am.
Okay. Is there anybody who does not prefer to go ahead and finish the hearing without having the lunch break? Okay, I'm not hearing.
Madam Hearing Examiner?
Mr. Najjar.
Yes, I just want to notify you, I do have a pre-hearing conference that will be brief at 1 o'clock, but Jared Najjar
Okay.
should be on for the county.
All right, sir. Thank you.
Sure.
All right, well, let's go back on the record then. And we've had a brief recess. We've had a discussion in the interest of getting the hearings concluded. We're not going to take a lunch break today. We're just going to go ahead and continue with Ms. Ramey's and testimony and Ms. Labor-Tucero. So, hearing examiner Ryan, questions for Ms. Ramey?
Just a few, and I'll keep it brief. Good afternoon, Ms. Ramey.
Good afternoon, Mr. Hearing Examiner.
If you could just explain to me, I'm sure I can figure it. I can speculate why, but if you could just answer when you said earlier that the existence of the many vacancies in the gas company cast doubt upon the company's need for the new positions. Could you just explain what is the thinking there?
Well, I'm trying to answer it. I'm not quite sure what you're asking.
Well, I
but-
just want to know, I mean, I'll be clear. You informed Ms. Hurst that when you saw the application, which included 32 new positions, you doubted that, or you expressed concern about that, and you said that the existing vacancies suggest that those positions may be unnecessary. That's at least what I inferred from your answer. If I've improperly inferred, then correct me. But if I've correctly inferred, then just fill in the reasoning why the vacancies suggest the new positions aren't necessary.
Well, I think the new positions are from the filing in the application were new. They weren't existing positions that were already in place. So they are kind of apples and oranges in that regard. The new positions that they were requesting were going to be just that, newly created positions to address some of the operations that they thought needed to be addressed by these specific positions. And that was 32. And then in the vacancies, there were like a good 50 vacancies. And so, the view was, I guess, you have these 50 vacancies and you haven't really been able to fill them. Why don't you focus on filling those before you go to adding new positions to your operation? That would add to your expenses. That was our concern. You're adding, new expenses. Just work with, filling the positions that you have vacant. And then, if you can't fill those, we were, concerned with, maybe we could preserve some of those vacancy savings and put them into the operation instead.
Okay, thank you. During the course of his testimony, Mr. Yardley explained that one of the benefits of an IMP mechanism would be that it would, in theory, prevent the sort of rate case pancaking that we have here. And by that, I'm simply, his position was, if you have a future test year and you have costs, well, certainly you can project out a year, but obviously they'll be making some of the IMP investments over more than a single year for many years. And thus his argument is, well, thus it's more efficient because we'll have less rate cases if you just give us the opportunity to have the mechanism. That's at least what I understood from Mr. Yardley. Do you have any thoughts about that?
No, not really. That's I wouldn't. I can't really respond to that because that's not my, I guess, area of expertise. And I really didn't. But I can't really support that or deny it.
Okay. At page 7 of your testimony in support of the stipulation, you note that specifically, and this gets into your concerns about the application, what was resolved by the stipulation, that is, the stipulation fully addresses concerns that staff had, and this is beginning on line 19 down to 21,
Okay.
regarding New Mexico Gas Company's proposed rate of return on equity. Am I correct to assume there that the application came in high in staff's estimation, and thus the reduction was satisfactory to staff?
Yes.
The capital structure, you note you had concerns. Can you describe for me what it was that the capital structure concerns you had? What concerns did you have, and how did the stipulation resolve that?
They were asking, for even though this is capital structure is Witness Tupler's area of expertise, they were asking for a higher equity, I think 53.47 debt. Okay, then if it's that just basic breakdown, that's satisfactory answer. I appreciate it. Thank you. The plant additions, can you just fill that in? What was the concern, and how did the stipulation address them? Okay, plant additions was our engineer area expertise. Okay, Mr. Martinez. Yes, Mr. Martinez, who is unavailable. But, given, like we said, the supply chain issues that we're all facing, we need to be realistic about timeframes of when a plant can actually be placed in service. We've seen this in some of our other cases at the commission, that there have been delays and have negatively impacted, contracts that have been signed to, build plant. So as I said earlier, we felt that the application was aggressive and maybe not realistic in what the timelines are actually going to be to implement and achieve some of the goals that the company wants to do.
Okay, and then the last item there you point is operation maintenance expenses and income taxes. If you could just fill out what was the concern and then how did the stipulation resolve it?
Like I said, a lot of our concerns were related to the, staffing positions, the vacancies. We realized that expenses are increasing. So we recognize that, the company needs to be able to cover those. As far as the income taxes, those are related. We did have some concerns that I'm trying to think in terms of the income taxes, about say the amortization rates that may have been proposed, but in the end, like I said, the company has a fixed amount that they're going to have to figure out the best way to spend it to, maintain its operations.
And moving to your stipulation testimony, well, not stipulation, excuse me, the bench request testimony, your response is, it's the joint document.
Yes.
And I'm not going to focus on a particular piece of testimony. I was more just curious at a general level. We've heard testimony from Mr. O'Donnell in this case that the projections from the future test year in the last rate case, after time passed and the data was accessible, in Mr. O'Donnell's view, there was a 13% overage in the projections. And I've heard both Mr. Gorman and Ms. Crane question that conclusion. Do you have any opinion on that subject?
Not really. Projections are just that. But from an accounting and financial standpoint, in the end, we definitely want to look at what has actually transpired and use those figures. The future test year does allow that based on, you have to have 3 years of records, and, everyone tries to be reasonable, I think, in their projections. But I think right now the current environment is pretty volatile. And so we just have to do the best that we can and try to stay and hope that things will be reasonable. But at this point, we really don't know where things will be in the next year or two.
And just to be clear, sort of the question is, we had a future test year in the 317 case.
Mhm.
There are projections made. Time passes, and now we have another case in which there are more projections made. And the basic thought was, well, if we go back and look at 317 and say, were the projections accurate? We can make a judgment about whether or not we should credit the projections in this case. And that's the real inquiry. I mean, to the extent to which the utility builds credibility because past projections have proven to be accurate, are we in that situation now, or are we not in that situation? And then do you have any judgment on that?
I think the projections have been fairly accurate and reasonable. They're basing it on, experience, and they're not, extremely off one way or another.
Okay, thank you, Ms. Ramey. That's all my questions, Ms. Hurst.
Thank you. Mr. Black, any redirect for your witness?
Thank you. Yes, Your Honor. Georgette, you had, in response to a question from hearing examiner Hurst, you had made a statement to the effect that in the last rate case, 19 00317-UT, that there was a stipulation, correct?
Yes,
Yes, and that the integrity management program, the IMP, was considered in that stipulation, correct?
yes,
You had stated, and correct me if I'm wrong, that the IMP, that staff did not oppose, or did oppose the IMP in that case. Is that correct? Or?
that's
Mechanism.
what I stated, but I misspoke. In the last case, staff was the only party that supported the IMP mechanism, but proposed modifications to it. The other parties opposed it in that case.
Okay, that's the only question I had. Thank you.
Thank you. Does anybody have any questions based upon hearing examiner Ryan's questions, my questions, or Mr. Black's redirect? Hearing none. Ms. Ramey, appreciate your time. You are excused.
Thank you, ma'am.
You have another witness, Mr. Black.
I do indeed. Thank you, Your Honor. Staff calls Alicia Leyba Tucero.
There you are. Good afternoon, Ms. Leyba Tucero. How are you?
Good afternoon, Madam Hearing Examiner. I'm doing well. How are you?
I am okay. And you get to be the last witness.
Well, that's typically the case for me.
Mr. Lee, would you please swear the witness?
Ma'am, would you raise your hand? You solemnly swear the testimony you're about to give, the matter not pending, should be the truth, the whole truth, nothing but the truth, so help you God?
Yes, I do.
Thank you.
Mr. Black?
Thank you, Your Honor. Good afternoon, Alicia. How are you?
Good afternoon. I'm doing well. How are you?
I'm doing fine, thank you. For the record, would you please state your name and position with the Public Regulation Commission?
Yes, my name is Alicia C. Leyba Tercero, and I am the Economics Bureau Chief in the Utility Division of the New Mexico Public Regulation Commission.
Thank you. Do you have in front of you a document that has been previously labeled Staff Exhibit 5?
Yes, I do.
What is that document?
That is my testimony in support of the unopposed stipulation in this case that was filed on May 31st, 2022.
Let's see. Was that testimony drafted by you or under your supervision?
Yes, it was.
Do you have any corrections to that testimony?
No, I do not.
Now, if I were to ask you the same questions today posed in that document, would your answers be the same today under oath?
Yes.
Is the testimony true and accurate to the best of your knowledge?
Yes, it is.
And I represent to the hearing examiners that this exhibit, staff exhibit number 5, was uploaded to the Dropbox.
Very well.
Thank you. Ms. Leyba Tercero, do you have in front of you a document that has been identified as Staff Exhibit 3?
Yes, I do.
And what is that document?
Wait, just a second. Was her direct testimony, was staff exhibit
5.
5? Thank you.
You're welcome. Do you have in front of you Staff Exhibit 3?
Yes, I do.
Yes. What is that document?
That is staff's combined testimonies in response to the June 6, 2022 bench request by hearing examiner and to the June 8, 2022 bench request by hearing examiner for commission staff that was filed in this case on June 17, 2022.
Thank you. Did you prepare any portions of that document?
Yes, I did. My portions are on page 6, line 14 to page 9, line 2.
Thank you. And did you supply an affirmation in lieu of affidavit attesting under penalty of perjury that you're, did you file that document? Was that document filed?
Yes.
Okay. And bear with me, please. Hearing examiners, at the beginning of the hearing, it was discussed that Timothy Martinez's testimony was stipulated in, and he also has some testimony in this staff exhibit 3. And I believe that that was also stipulated in, am I correct?
That part of exhibit 3, yes.
Yes. And his testimony that's identified as staff exhibit 6, which is his testimony in support of the unopposed stipulation, was also stipulated in, so I don't need to worry about that.
No, my understanding is that we stipulated that testimony in the first day.
I just wanted to clarify. Your Honors, I offer staff exhibit 5 and staff exhibit 3 to be entered into the record.
Staff exhibit 5, the direct testimony of Ms. Leyva Tercero, as verified by her here today, and subject to the non-objection agreement, as well as the verification from staff counsel that the correct copy of exhibit 5 has been entered in the Dropbox, is admitted. Staff exhibit 3, the combined responses of staff to bench requests containing the respondents Martinez, Ramey, and Leyva Tercero, without objection, upon verification, and upon the verification from staff counsel that the correct copy of staff exhibit 3 has been placed in the Dropbox, is admitted. Mr. Black?
Thank you, Your Honor. I now tender the witness for the hearing examiner's examination.
Very well. So, Ms. Leyva Tercero, have you been listening to the testimony?
Yes, the
This week?
majority of it, yes.
Did you just listen to the testimony of Mr. Tuffley?
Yes.
What do you think? Should we switch up staff order next time so you all don't have to be last and get shortchanged in the question department?
That would be fine with me, Madam Hearing Examiner.
Okay. Well, I'll tell you the same thing I told him. I'm really going to think about that next time. You think I'm kidding? Sometimes I feel bad, staff has to wait till the end.
Well, I guess at the same time, I would say that we do benefit from getting to hear all of the testimonies of the witnesses before us.
Well, that's probably true. I hadn't thought about that. And fair or not fair, you can tell me whether or not, I've got two questions that relate to, one is rate design and the other is a policy question. So, you are staff's witness on cost allocation and rate design.
Yes, I am.
So these questions actually I had from staff witness Martinez, who's unavailable, and if you're not comfortable, I'll figure out a different way to get the answer. But I wanted to start with those, if it's all right, Ms. Leyva-Tercero, because I don't want to forget them.
Okay.
And generally, I had questions about discounted transportation rates. You're familiar with the discounted transportation rates, correct?
Yes, I'm familiar with those, but I don't typically address those. But I will do my best to answer your questions.
Well, and basically, I just wanted to address the testimony that says discounted transportation rates provide revenue to the utility. In some cases, the customer would otherwise bypass the system for natural gas. Do you generally agree with that proposition?
Yes, that's my understanding.
And then the next statement is the one I want to hone in on. It says, no other customers subsidize the discounted customers. Is that your understanding?
I believe, yes, that is correct. I believe that is required by rule, that those customers need to cover the variable cost. And
so that's a Rule 660 requirement?
Yes.
Okay. My other question had to do, are you familiar generally with all of the provisions of the stipulation?
Generally.
Okay. And you probably have heard me try to characterize just the way that my brain is looking at it, but also by the headings in the stipulation. And that, for example, the stipulation paragraphs 21 through 25 are under the heading of greenhouse gas emission reduction initiatives in this case.
Yes.
And so you generally familiar with those parts, those paragraphs of the stipulation?
Generally, I did not focus on those at all, though, in my analysis and testimony.
And I understand that too, but this is more a policy question that I have on this. And you probably have heard me question some other witnesses about this, but generally there are agreements contained within these paragraphs to do studies or analysis or include certain things in studies or analysis, aren't there?
Yes, I believe so.
And so from a policy perspective, Ms. Leyva-Tercero, how would, do you believe that the commission has any enforcement responsibility with regard to those things? Those commitments made in paragraphs 21 through 25?
Well, I believe that if those are agreements made, then yes, then the company would be held to completing those analyses, and they would be provided at some point for review.
Well, I was just wondering, you know, how an agreement to do some kind of study that would include an analysis of electric vehicles or certain types of electric vehicles, how such an agreement could be enforced by anybody.
Yeah, I guess I don't know. I don't know the answer to that question.
Okay, I mean, normally, for example, if parties had agreed that the IMP rider mechanism should go forward, there was a whole or there would be a whole procedure to implement and true that up, would there?
Yes, that's correct. There would be.
So I understand that kind of agreement and how that could work. And I'm just sort of trying to figure out how, number one, whether the commission, the parties are asking the commission to do anything with regard to paragraphs 21 through 25. And if they are, what are they asking the commission to do?
It's my understanding that they are not asking the commission to do something about that.
Okay, why was it included in the stipulation then?
Because the parties that wanted, to see this information, the company agreed to provide that to them for analyses in future cases.
Okay. And if we can look at page 3 of your testimony, please. And you're answering a question posed at line 9 and 10 about providing the overview of the stipulated allocation of revenue increase and rate design. And I'm focusing in again on procedure. And at line 11, you say, as indicated under paragraph 8 of the stipulation, the proposed rate schedules filed by gas company under advice notice 87 shall be withdrawn, and the company will file revised rate schedules. That's your testimony?
Yes, ma'am.
So as far as then the procedure, are they still gonna, if gas company asks to withdraw, once you file an advice notice, can you withdraw it?
Yes, so if the commission approves this stipulation, then that advice notice would be withdrawn pursuant to the final order here.
And when they refile, would they refile under advice notice 87, or will they go to the next advice notice?
They would go to the next advice notice.
Okay. So then in the commission records, there's not going to be anything associated with advice notice 87 because it will have been withdrawn.
That's correct.
Okay. We never get much clarification on the way, on the way that documents that are not included in a case are handled. So thank you for that clarification. I know there's a whole document world that doesn't relate to specifically a case document that staff deals with. You probably have heard me make make inquiry about this, and I just want your perspective on it, Ms. Sarah. But if we look at page 4 of your testimony, and you're referencing at lines 4 through 6, the revenue, the requirement increase, and you also cite that to that average residential customer total bill of 4.3 as being the increase, correct?
Correct.
You know, I have a bench request out on that.
I know.
I want to see what this customer looks like and how many of them there are. Why is this important to you?
Well, I would say that the average residential customer, that number provides like a general gauge of the bill impact for the residential customer. So for a large class like residentials, I think that the deviation would be smaller from that average for those customers because it's such a large class of customers. So it provides a reasonable estimate of what the bill is going to be. But I would say if it's a larger customer, then the usage might vary more. So that number might not be as useful. But in my experience, average usage is something that I typically see in procedural orders, and maybe not yours, but when requiring the bill impacts at various levels of usage, one of those levels is the average. And so that's kind of just been something that we've historically provided. I believe hearing examiners have asked for it. I think commissioners have asked for it. So it's kind of been a habit to provide that number.
So you think it is useful?
Yeah, I think it provides a good estimate.
Is there other information we should be asking for that we're not asking for that might be more useful?
Well, I think that we get, you get a range at different usage levels in there. So you're able to see what that bill impact is going to look like at lower usage levels and higher usage levels. But I mean, you could always ask, I guess something that could be requested is the number of customers at each of those usage levels.
Well, now that I found out there was this graph, I think I'll be asking for that from now on. And I understand your testimony that might not be as useful for certain customer classes as it is for others. But I wonder why we don't ask. For example, for a representative average customer for the large volume general service rate 58.
We could definitely ask for that.
Think perhaps it wouldn't be of as much interest, especially in this case where 90% of the customers are residential customers and small service.
I think the residential class is more useful to see that number in this case.
Madam Hearing Examiner?
Mr. Jome?
Yes, I just want to make sure that I get you what you want in this bench request. And I was going to run through you very quickly. We can do it now or later, what it's going to look like that you will get. And I just want to make myself available to explain to you what we've drafted up to see if it satisfies your request with regard to this table of customer usage and impacts.
Okay, we can talk about it later.
Thank you.
Okay, thank you. Okay, so further on down on that page, Ms. Leyva-Trussero, you say, now you're talking about paragraph 16. The stipulated rates will be implemented on January 1st, 2023, or within 7 days following the final order. Correct?
Yes,
Okay, so by that, do you mean that the new rates go into effect on January 1st? Or that the new rates and then would begin accruing for that period of time? Or do you mean that any bills that are read for January usage as of January 1st, they could apply the new billing rate?
yeah, the new advice notice would go into effect on January 1, 2023.
Which means they could start charging those rates
Yes,
for service going forward.
yes, ma'am.
Okay. Gas company shall file appropriate advice notices to implement the revised rates at least 5 days prior to their effective dates. That's your testimony?
Yes.
Isn't that like Christmas?
Mhm. That's probably right around that time, yes.
Is staff going to review these?
That would be me, and yes, I will.
Okay, all right. I'm thinking January 1st, okay. In putting together the staff the staff review analysis and issue list to begin negotiation, is there a pecking order or order of importance that staff has of issues?
Not necessarily, but I would say that the revenue requirement is definitely a very important issue.
And how do you define significant as you use it in line 18 on page 4? You say the stipulated increase represents a significant reduction.
Well, I would say less than half is a significant reduction.
Bless you. Additionally, on page 5, you testify at line 1, staff believes that the stipulated allocation is reasonable and generally reflects the results of gas companies' fully allocated cost of service study. That's your testimony?
Yes.
What do you mean by your characterization of generally reflects?
Well, I tried to explain that. I don't know. I guess I wasn't very successful in that, but what I would say is, so for example, you have two classes that in the company's fully allocated cost of service study, that where the results show that those classes are above the company's requested rate of return. Their rates of return are above that. So those two classes are covering more than their share of cost of service. And so in the company's initial application, it proposed not a decrease, but no increase. And that was to mitigate the impact on other classes by not having a decrease there. And so under the stipulation, I would say it generally reflects that, in that although these two classes, rates 30 and 31, are getting some increase now under the stipulation, the increase to those two classes is the lowest of all the classes. So that generally reflects those results of the fully allocated cost of service study. And then you go on to the next group, where in the gas company's initial application, in the case, this was rates 10 and 54, those two classes were below the requested return, but they were above the overall return. And so the company had proposed sort of the next lowest increase for that group of customers. And under the stipulation, you see that's similar there. Those two classes are getting the next lowest increase. And then everybody else is something above that. So, and that reflects the results of the cost of service study.
But if rate number 30 and 31 were already exceeding their cost to service, and couldn't it be inferred subsidizing the other classes, why should they get any increase?
No, I mean, I agree. It's not a perfect allocation, but I think that it is reasonable. It was a result of settlement and, negotiations, compromise, and I would say that it is reasonable and it is in the public interest, because in some way the stipulation reflects the interests of all of the stakeholders that were involved in this process.
But really, do we have any interveners that represent rate 30 irrigation service and rate 31 water and sewage pumping?
Well, I mean, I would say everyone has the opportunity to intervene in the case.
No, I understand that, but to your knowledge, Ms. Leyva-Trucero, are any of the interveners in this case specifically identify themselves as being interested, as having ratepayers in classes 30 and 31?
No, not that I'm aware.
Then your testimony on page 6 basically indicates that rate 37, the gas air conditioning. Is among those that has the highest increase.
That's correct.
It does have the highest increase.
Yes.
12.97. Is it going to cover its cost of service even at 12.97 increase?
Yeah, I don't believe so.
Do you know if there's many customers in that use that rate?
No, I don't.
Let's look at page 8 of your testimony with regard to the residential access fee.
Okay.
And I appreciate your explanations at line 5 through 12 about the purpose for that access charge, can you tell me what typically is included in that, that access charge for residential customers?
So that typically recovers customer-related costs like metering, meter reading, billing, those types of costs.
The proposed access charge initially was almost 19%, wasn't it? From $12 to 14.25.
Yes, that's correct.
And the overall total change was 20.5, correct?
Yes.
You indicate in your testimony that the 40% or 40%, the 40-cent change agreed to in the residential access charge from $12 to $12.40 was an approximate 3.33% increase, correct?
So we're,
That's line 3 on page 9.
yes, that's correct.
Are you comfortable with that amount of increase in the access charge, that it will go toward actually paying for the cost of service for that expense?
Well, staff has supported it. I do think it is reasonable, but I will say that I don't necessarily think that the company's initially proposed increase to the customer charge was necessarily unreasonable. And I say that because one of the goals in rate design is to, bring your rates to their cost-based level. But of course, we also have to take other things into consideration, such as the impact on the ratepayer. And so that's why we typically use this gradualism approach. So while staff would have likely proposed something lower than what the company proposed based on staff's, whatever staff's revenue requirement would have been, it would probably have been higher than the $12.40. But I do think that that number is a reasonable number because it does take a gradual approach, but yet it still moves toward cost. And I think that from staff's perspective, this takes into consideration recent concerns by the commission regarding the rate impact specifically on residential customers.
Further on down on page 9, you're testifying with regard to the IMP mechanism. And you say at line 14, according to gas company, the costs associated with its integrity management investments are necessary to maintain safe and reliable service, but there are no incremental revenues associated with these integrity management activities. By no incremental revenues, do you mean additional revenues?
Yeah, so I think, we heard testimony earlier that these projects don't result in expansion that's going to bring new customers and produce new revenue.
But they're still getting their return of the existing asset. Correct?
Yes.
Further on pages 10 and 11, you're discussing the withdrawal of the IMP mechanism and the alternative implementation of the IMP regulatory asset, correct?
Yes,
And you say, when you pick up on the bottom of page 10 and 11, that they've been filing regular or base rate cases on a regular basis. And then on page 11, line 1, if the trend continues, the integrity management costs will continue to be recovered in a relatively timely manner, correct?
yes,
Staff's position on that, I believe, has changed from the last case.
yes, it has. Staff was not opposed to it in the last case, but did have some conditions, but we ultimately stipulated to no IMP mechanism. And in this case, I think this sort of explains why staff's position has changed, because now we're seeing this trend in the filing of rate cases that are, pretty regular, and the use of future test year, and then those things together, staff believes mitigate the need for an IMP mechanism.
So if you're filing a rate case every 2 years, you're getting a timely recovery?
That's staff's opinion. Also, the use of the future test year.
Are there any changes from the agreement on the IMP regulatory asset in this stipulation as opposed to the prior stipulation?
I have to say, I guess first let me explain sort of staff's process in the review of the IMP mechanism. So I would rely on staff's engineer, Mr. Martinez, for staff's position as to whether or not, we would support IMP mechanism, as, Mr. Martinez is the engineer and the team coordinator on the case, who is most familiar with the gas company and its integrity management programs. So my job would then be, if staff were to support the mechanism, then I would review and analyze the mechanics of that rate mechanism. And so I didn't look at, it wasn't my role to look at the IMP regulatory asset. That was something that Mr. Martinez addressed. So I don't know all of the details of that.
Okay, so you don't know if what the provision regarding the asset in this case is the same or similar to the one in the prior stipulation?
I believe it's similar, but I think there are some changes.
If we look at page 13 of your testimony, the question posed at page or line 6 and 7, how are gas companies' request regarding rate number 39 modified by the stipulation in this case? And you say, per paragraph 27 of the stipulation, gas company agrees to modify the language of its current rate 39 to remove the provisions relating to optional station construction and operation. These changes are reflected in stipulation exhibit number 5. That's your testimony.
Yes.
So does this mean that in all of the proposed changes that were in rate 39, well, were there any proposed changes in the original application to rate 39?
Yes, I believe I explained that on page 12 of my testimony.
And their agreement to modify the language, does that change all of the proposed changes? Or
Yeah.
just part of them?
Yes, it does, because it removes that entire optional station construction and operation provision.
Okay, so then all of the proposed changes will be gone pursuant to agreement.
Yes.
That was hard to explain. Okay, if we look at page 16 of your testimony, with regard to paragraph 32 of the stipulation, you testify at lines 21 and 22, gas company shall include in its next general base rate case filing a request to implement the WNA, and that's the weather
Normalization adjustment.
normalization adjustment on a permanent basis. That's your testimony?
Yes.
Why do they have to do this?
Well, because the stipulation in the 2018 case made this WNA mechanism a pilot program. And so it's supposed to be in effect for 5 years. And then after that time, then we would review it again. And so.
But you think you think it's worthwhile to have such that now it should be permanent?
I think that is to be decided in that case. But I do believe that it is working as it's supposed to work. I tried to emphasize in my testimony that it does work both ways. So if you have warmer than normal weather, then you're going to have a charge there so that the gas company can recover its authorized revenue requirement. But then if you have colder than normal weather, that'll result in a credit to customers so that the gas company is not over recovering its revenue requirement. And so we saw that in the last advice notice that was filed, that there was a credit. So it works in both ways. I think it's working the way it's supposed to. And there were no protests under the last advice notice. And in addition to that, we did file direct testimony in the last case, and I don't recall any party opposing it.
So can I conclude, Ms. Labor-Tercero, then that that the WNA mechanism provides, I know you just testified it sounds like it provides a more timely price signal recovery, but does it also provide more accurate? Well, I guess it's not really forecasting though, is it? Is it all just about timely recovery?
It provides, I would say the purpose is that it provides stability in revenues.
Which relates to timely recovery?
Yes, I would agree with that.
Okay. I believe that's all I had for you. Ms. Labor-Tercero, thank you. And Examiner Ryan.
Yes, I'll
Do you
keep
have
it.
questions?
Yes, I'll keep it very short. Thank you. So Ms. Labor-Tercero, I did see that in your testimony, and I just want to confirm regarding the IMP and your desire to show that it functioned in both directions. So what you described there at the bottom of 17 and over to 18, you're basically describing the rate 10 and rate 54 customers got refunds of sorts because they were basically given a credit. Is that correct?
Yes, under the WNA mechanism. I believe you said IMP.
Oh, I'm sorry. I apologize. WNA is what I meant to say. Thank you. Is the WNA mechanism effectively an attempt to separate out the company's ability to collect revenue from volumetric sales?
Yes, it is a form of that.
It is a form of that. So it's basically decoupling of some kind.
Yes, it's a form of decoupling.
Yeah. Did you participate in the negotiations as far as deciding whether the settlement agreement is something that should be embraced?
I did specifically in the area of allocation and rate design.
As that process was going on, and maybe if this wasn't your specific focus, perhaps you can answer it, but did staff have an expectation that the IMP mechanism would be withdrawn?
I would say we did, yes.
You did, okay. And that's as a consequence of a pattern we've seen here, correct?
Yes.
Ms. Crane, when she was describing the initial application, she described that as excessive. Your colleague, Ms. Ramey, she said the word aggressive. Did you, when you saw the 40.7 million request, I mean, what was your initial reaction to that? Do you sort of fall in line with those? Did you see it as excessive or aggressive?
Yeah, I mean, I guess I would say I saw it as a large increase, but at the same time, I'm not the revenue requirement expert, so I didn't look into all of the, the revenues and expenses and the reasonableness of that.
How did the obviously the customer access fee was reduced rather significantly? How, I mean, to your knowledge, did we get from 12 to 12.40? What was the basis for saying, well, let's increase it 40 cents? And do you know, was there a, go ahead.
I'm sorry. I would just say that was just a result of the settlement negotiations, and I don't know that there was any specific approach in getting there. That was just part of the settlement negotiations.
Okay, so someone effectively floated, how about 12.40? And everyone said, okay, that sounds good.
That's pretty accurate.
I'm honestly asking, it sounds like what you're saying, there's no empirical way to prove that 12.40 is correct. I mean, I realize that's probably impossible and a ridiculous thing, but okay, I'll stop there. And the last question, I asked Ms. Ramey this, but perhaps Mr. Martinez is the correct person, but he is obviously not with us here today. You know, the question is basically whether the IMP mechanism would stop the rate case pancaking.
So no, my answer to that is no. And I think that I mentioned that in my testimony at page 11, lines 5 to 6. So it's my understanding from Mr. Yardley's testimony that implementation of the IMP mechanism would not eliminate the need for future rate cases or even delay them.
Okay. Because that seemed to me, as I was thinking about and listening to the testimony, that was, as far as I could deduce, the sole benefit, which would be you forego the company having to come in on a regular basis to request funds. But you're saying that, as far as your understanding, what you just read to me, that wouldn't have that consequence.
Yes, my understanding is that it would not have that consequence.
Okay, thank you very much, Ms. Leiva-Trocero.
Thank you.
Mr. Black, any redirect for Ms. Leiva-Trocero?
No redirect, Your Honor.
Any questions from any party based upon hearing examiner Ryan's questions or my questions to Ms. Leiva-Trocero? Hearing none. Ms. Leiva-Trocero, thank you for your time. You're excused.
Thank you.
Mr. Black, anything further from staff?
No, and I just wanted to, again, verify on the record that Staff Exhibit 6 was uploaded to the Dropbox the testimony of Timothy A. Martinez in support of the unopposed stipulation filed May 31, 2022. And staff rests.
Thank you. My notes indicate that staff exhibit 6 was admitted. Are you questioning that occurred?
I'm just representing to
Black.
you that it was uploaded to Dropbox. I don't believe I said that at any time.
Okay. No, you had asked previously about staff exhibit 6, and I just wanted to verify. Because my note could be incorrect.
And my memory could be incorrect, so.
Okay. Now, as far as I know, I do not see. I think all the provisional exhibit rulings have been changed to all of the exhibits being admitted. Okay, I believe we have reached the end of our witness presentation. There are a couple of matters that I think that we need to address, including one that you wanted to talk about, Mr. Dome. And that has to do with bench requests. And right now I have 9 outstanding bench requests for gas company.
That's what we have, Your Honor.
Okay. I don't think I had any bench requests for anybody else. And you wanted to talk to me about bench request number 1 that was issued during Mr. Shell's testimony. And I clarified that bench request 1 yesterday during AG witness Crane's testimony, because I had a name to put on the document. But my understanding of this data usage document is that it would be able to show me the number of customers in what gas company has characterized as an average or typical rate 10 customer. And if that information was part of this data usage chart that showed me all of the rate classes, that was fine.
Ma'am, what I might suggest is I can share a draft of the chart that we have prepared. And I'm not asking for, a sign up, but I just wanted to show you what we put together to see if this is what you have in mind or if you want more or less.
Okay. Do you want to email it to me, or how are you going to show me?
I think I've got someone here who actually knows how to work a computer, and she's going to share it. Oh, the host has to allow us to share, ma'am.
All right, I could do that.
And then she knows how,
Lisa Trio.
Lisa Trujillo knows how to share this. And so it doesn't even rely upon me to get it on the screen.
Oh, there's Lisa Trujillo on the.
That's the group.
Yeah, the group.
Hmm.
Not everybody at once.
So, Ms. Trujillo, I've made you a host. That should now activate your ability to share.
So, Madam and Mr. Hearing Examiner, this is what we put together that would be this response to number one. And we call this a usage distribution and bill impact chart. And this is for rate 10 residential customers. And it shows on the first column on the left, the annual average therms per month from 0 up to 150 or more broken down. The number of customers in each one of those categories, and that comes very close to 500,000. That's obviously rounded, and that should be 77,000, not 77 in that one, so that's a mistake. The third column shows the percentage of the residential customers that are in each one of those usage categories, 14, 39, 29, 15, 2. And then the last column does show that percentage bill increase. The 4.3% wraps around the 50 to 74 therm usage group, but it runs from 3.3 to 4.1 to 4.3 to 4.4 to 4.
I'm sorry, Mr. Dom.
I'm sorry, you're right. I went too fast. It goes, the last column runs from 3.3 to 4.1.
Right.
Okay. And then I just dropped a note there, Madam Hearing Examiner, that shows that focusing on the 53 therm range, it's hard to calculate. And I think one of the witnesses said this, it's hard to calculate a specific number for a specific therm usage. So what we did was we tried to wrap the 51 to 55 therm customers in, and that's about 38,000. And that all fits in that 50 to 74 therm range. So this is a usage distribution chart.
Okay. No, I think that gives me the information that will allow me to put the 4.3 into context and explain it if I'm required to do so.
Yes.
So Hearing Examiner Ryan, does that provide you with sufficient information with regard to the typical 4.3 percent, typical customer having a 4.3% increase when they utilize 53 therms, which has been referred to as a typical or average residential customer?
Yes, I mean, I have questions about this, but I think I just have to look at it for a little while.
Yeah, I that's exactly what I was thinking. Mr. Domi, as far as I know, this would be a satisfactory answer to bench request 1.
Thank you very much, Madam Hearing Examiner. And so what we will do is prepare a document with all 9 of our bench request responses, and that should come in to you this afternoon.
Very well. And will you please make sure it gets filed in the record and served?
Absolutely. Yes, ma'am. That's what we were going to do. Yes, ma'am.
And put it in the Dropbox?
Yes, ma'am.
And with that, as I mentioned the other day, pursuant to the party's non-objection to the bench request, already admitted into the record, when asked whether or not there's any objection to the parties waiving objection or opportunity to respond pursuant to 1.2.2.35K NMAC, in capital NMAC. Anybody have an objection to that procedure? Hearing none, those bench request responses will be admitted pursuant to rule and no objection.
I was confused.
Okay. It's item 2, bench request. Item 3. I believe I've already indicated I do have one issue that I would like to see briefing on. But hearing examiner Ryan and I would like to think about it over the weekend to see if there's any other specific issue that we would like briefing on. Obviously, any order on that would not happen on Monday. And other than that, with regard to any post-hearing writing, I just remind the parties that they've already agreed to any initial briefing and or proposed findings, conclusions, whatever the parties may want to file. I will remind the parties, my preference is that if parties are going to file something, especially in a stipulated case like this, less is more, and I believe anything that can be filed jointly, as opposed to any individual briefing, would be appreciated. However, obviously, parties can make their own choices about what they choose to join or not join. Again, initial briefing was agreed upon July 22nd, with any response briefing on July 29th. Does any party have any other procedural matter that we need to discuss that I haven't already addressed? Hearing examiner Ryan?
Nothing for me.
Okay, I'm not hearing anything else. Hopefully I haven't forgotten anything. Let me just thank our court reporter, Mr. Lee. Appreciate you persevering here, sir, for 4 days. And my thanks to all the parties for your participation. I believe that we have very efficiently and effectively navigated presentation of the case. And I appreciate you. And with that, if there's nothing further, we are adjourned. Hope everyone has a nice weekend. Take care.